good and bad times. We want, in particular, the G-SIB, the largest banks that have high levels, very high levels of capital liquidity. Indeed, we spent years raising those levels over a long period of time. And I think there's broad agreement, as you point out, that capital is strong. And, the question there will be what sorts of increases will be justified. And that's what we'll be looking at. The other thing is to point out the trade-off between higher capital. The benefit of it, of course, is to have stronger banks that can lend and maybe survive more crisis environments. There are costs as well, but I think it's going to be, as always, a question. I think it's going to be, as always, a question of weighing everything it goes. Last thing is we benefit from these banks of all different shapes and sizes. Banks of all different shapes and sizes. We want to be careful not to regulate smaller banks, not to regulate real smaller banks. Business models are challenged with all the business models. Challenged with all of the largest.
Well, this committee would expect to see a quantitative analysis of whatever the capital charge is going to be. We would expect that from the Fed, as we do from other regulators. With that, we'll now recognize the ranking member of the full committee, Ms. Waters.
At this committee's last hearing on digital assets, my Republican colleagues proposed a stablecoin bill that would create 58 different licenses with federal regulatory approval over only 2 of the licenses. The remaining 56 licenses can be issued by each state, territory, and D.C. with little or no federal oversight, regulation, and enforcement. This proposal takes state creation into a whole new level. It effectively allows every state to preempt another state. DC-based coins, for example, would be sold to individuals nationwide, and New York and North Carolina regulators could do nothing to protect their own residents, while even the Fed would be severely hamstrung in providing any oversight. I argue that we should allow states to be part of this process, but we must have a strong, enforceable federal floor with the role of the federal reserve to approve the
What is going down, my family? How is everybody? Thank you so much for stopping by once again. What is up, Monster Mike? Thank you so much for your donation, my friend. Coming in super hot this morning. Thank you. My family appreciates you as always, my brother. Anyway, what is going on, Monster Mike? How is it going in the markets, man? Are you long something right now? Are you short something right now? Let me know what it is, because the markets are essentially consolidating during the testimony of the Fed, right? So we have Jerome Powell speaking his little heart out right now. So definitely keep an eye on market movement right now, you guys. But please let me know if you can actually hear me speak. Please let me know on the chat if you can hear your boy speak right now. What is up, Sebastian Lim? Moderator Sebastian Lim coming in hot too, man. Thank you so much for your donation, my brother. That really means a lot to me. Trust me when I say it, dude. My family watches this, after I stream, sometimes during the stream, and they're like, "Wow, man, people are so kind here." And I have to be honest, man. I'm surrounded by great people here. So don't worry about Wolf. Oh, you're talking about don't worry about it, bro, but check Wolf. Is that the case? We can definitely do that, dude. Yeah, I remember ticker symbol Wolf was one that we were just kind of impressed with yesterday, right? As we were seeing likely an upside for it, right? So yeah, let me go ahead and just kind of pull that up real quick and see what's going down with it, right? So just like this here. You were telling Monster Mike, yeah. But anyway, let me have it up here because I'm still curious about it nonetheless, right? So let's see, WULF, and remember that this ticker is actually dependent on the crypto market, or actually Bitcoin market in specific, as it is one of the miners, right? Very cool. Here we're getting that breakout upside of the resistance level we were talking about yesterday. Very cool. Nice, man. Let's see. So yeah, I expect a continuation to the upside here, particularly to about 188 if we can actually reach that by the end of the session today. That is still very much still in the cards, and actually this thing is set to continue on to the upside even beyond the target of about 201. So this thing is actually, it looks absolutely beautiful, man. Very, very, very intriguing process right here, man. I love it. So Sebastian saying, I'm curious about FFIE and OCEA. Yeah, absolutely, man. We'll go ahead and put that up right after, dude. So anyway, let me continue on here with WULF, because we want to see if we can have any type of pullback in the immediate short term. Samantha H, good to see you here. Very, very happy to see you. It's been a while since I've seen moderator Samantha, and I can't say how excited I am to see you here, Samantha. Thank you so much for coming by. Thank you for your support as always. And what is up, Daniel? How you doing here in the chat, man? Good to see you. And Philip, is that still the case right now? Is the music still sounding weird? We have it dropped down just a little bit, but is it still sounding weird right now? Can you hear it? See if it sounds like bathroomy, like that effect that you were talking about. Thank you for letting me know, by the way, my brother. So, Rainey, how you doing? The market is terrible today. Yeah, that's because what's going on with the Fed right now, right? So they're currently speaking their little minds out. Oh my goodness, Snow Drifter, how you doing? And saying hi, everybody. Let's get them gains. Absolutely, man. Very, very excited to be streaming today. So the word goes, what is up, man? Good to see you here. You know what? I'm actually, I think, are you guys ever kind of how can I say this? Curious about, so it won't matter. Okay, gotcha, Philip. Thank you. Are you guys curious over what the Fed is saying? Because I'm pretty sure we can actually hear that directly into the feed, right? So like earlier, I was trying to actually mess around with it to see if I can get it to display like the meeting, right? So what I did was something along the lines of this right here. Check it out. So just like this, right? And then
deemed
like that
under their supervision.
Are you able to hear it?
That
In other words, is size alone, should we be looking only at size, or should we look at cost-benefit analysis and activities? And my time's expired. If you'd answer in writing, I would appreciate it. I think this is an important issue. I yield back, Mr. Chairman.
We'll now go to Ms. Velasquez of New York for 5 minutes.
Thank you, Mr. Chairman. Chair Powell, at your press conference last week, you stated, and I quote, "The committee is completely unified in the need to get inflation down to 2% and will do whatever it takes to get it down to 2% over time. Some analysts have interpreted this statement as the FOMC's willingness to trigger a recession in order to get inflation to 2%. How would you respond if this is a fair and accurate interpretation?
So our statutory goals are price stability and maximum employment, and we are dedicated to using our tools to achieving those. In the case of
Is the volume good in this?
employment, we still have historically low unemployment rates and high employment rates now, high participation, a very strong labor market. We're very far from our inflation target of 2%, and we're very focused on getting back to 2%.
And how does the FOMC takes into consideration the impact of rising interest rates on LMI communities and small businesses
Yeah, that's what I wanted to know.
when determining monetary policies?
So we only have one interest rate to raise or lower. It's not true, but mainly one main interest rate to raise or lower, and it applies to everyone. But I would say that inflation hits LMI communities and people generally at the lower end of the income spectrum much harder than people in the middle or at the high end, because high inflation can get you into trouble right away if you're living on a fixed income just to cover the basic necessities. So it is for the benefit of those people that we must get inflation under control. It's for the benefit of all Americans, but particularly for those people. And we keep that in mind as we are strongly committed to getting inflation back down to 2% over time.
Well, and they are the same people that are having a hard time accessing loans, the same with small businesses. Chair Powell, Vice Chair Barr's report on the Fed's review of Silicon Valley Bank states that while there was regulatory tailoring conducted in response to S-2155, there was also, and this is the part that really concerns me, a cultural shift at the Fed under the direction of the previous Vice Chair for Supervision, Randy Quarles.
Here's
According
the
to
markets.
the report, this shift included pressure to reduce burdens on firms, meet a higher burden of proof for a supervisory conclusion, and a need to accumulate more evidence than in the past. As chair during that period, were you aware of this cultural shift and the impact it was creating?
So I think we learned from the Silicon Valley failure and
Yes, they do,
others
Sam.
that there is going to be a need for stronger supervision and also
It's within
regulation
the
for banks of that size. And
consumer
I'm committed
price.
to learning the right lessons from this exercise and to forthrightly implementing
But
changes.
were you aware of the cultural shift?
So I can't really characterize it that way. Certainly, I was aware.
They
that
remove it when
were
we
trying
look
to
at the
avoid
core
excessive
CPI.
regulatory burden. That
So
is
do you
always
disagree
inappropriate.
with Chair Barr's report in that respect?
I'm sure that the people who wrote the report were accurately reporting what they heard from back in.
How often were you meeting with Vice Chair Quarles?
I reasonably
they're
frequently,
drilling.
we sat quite near each other.
And never discussed the cultural shift?
I didn't say that, but I don't remember it. The way you're describing it is not what I recall. I recall Vice Chair Quarles talking about things like focusing on the really important issues and not getting diverted into other.
So the way it was described by Vice Chair Barr is not what you recall?
Well,
So
I
what
had no part
steps?
in. I said I had no part in preparing the report. I'm confident that the staff who worked on the report reported accurately what they heard. I'm sure that that's right.
So what
Markets
steps
still don't like it.
did you take proactively to meet with regulatory and supervisory staff?
Well, I think we're taking
Exactly,
significant
Sam.
steps now. We're, as you know, under Vice Chair Barr's leadership, we're looking carefully at these events and asking ourselves, what do we need to do with supervision? And I think there is a point to be made that there are situations in which we need to be more forceful and more proactive. Not in all situations, but in some. In regulation, I think we're learning that we need to update our thinking around liquidity regulation, which was based on a certain speed of bank runs, which now looks to be outdated.
My time has expired.
Gentlelady's time's expired. We'll now recognize the gentleman
Man.
from New York, Mr. Garbarino, for 5 minutes.
Thank you, Mr. Chairman. Chairman Powell, thank you for being here. I just want to start off by asking a few yes or no questions. Was the Silicon Valley Bank failure a result of a liquidity issue?
I'm sorry.
Was Silicon Valley Bank failure a result of the liquidity issue?
Man, that is a direct question.
Among other things, yes.
Signature Bank failure, the result of a liquidity issue?
Yes, I mean, that's not, there's also a lot of very bad management decisions being made here.
But liquidity. First Republic, was that a failure result of a liquidity issue also?
Among other things, yeah. I mean, I wouldn't say just liquidity.
Well, all right, were any of them a failure of having too low capital levels?
So well, let's go to Silicon Valley Bank. You know,
He's really
the
trying to
issue
dodge
that
it.
triggered the run initially was the presence of significant losses in their securities portfolio.
Yes.
And that is in it. That's, you know, that is a capital issue.
So they had too low a capital, the requirements, so what?
They weren't required to, as you know, they weren't required to take that into account in their capital. But I think if you remember that what people were focusing on was these portfolio losses, and then what people weren't focusing on was the fact that they had in excess of 90% uninsured deposits, and that's what caused the run.
So would the increasing capital requirements for Silicon Valley Bank or any of these other banks or all banks together, would that have stopped these banks from failing?
That's a hypothetical, unknowable question. I think it might have helped. I think it might have helped, but
How much then? Increasing it by how much would have helped?
It's very hard to say. Very hard to say. I mean, clearly the main issue there was a failure of management to follow up, a failure of supervision to require them to follow up, and really the liquidity regulation was just not appropriate. We needed to have stronger regulation around liquidity and uninsured deposits.
So last year you said the banking system is very strong, well capitalized, highly liquid, does a much better job of understanding risks that it runs and managing them. And just today you said the banking sector seems to be strong. Do you still stand by those statements? I mean, just said it today.
Yes.
So, yep. Last month, Vice Chair Barr appeared before this committee, and he agreed with you. He said overall banks have a strong capital and liquidity. Secretary Yellen has said similar things. But today, even though you've all said that banks have strong capital, you seem to lead us today by saying the bank's considering what increase would be appropriate of capital requirements. So has the board already decided that an increase will happen? They're just deciding what's the size of the increase for capital requirements?
No. What I meant to say, what I thought I said was that any increase above these levels would need to be shown to be justified.
So I understand, and you have a vote as whether or not with this proposal you'll vote on whether or not. Do you personally think that an increase is necessary at this time?
Do I think?
That an increase in capital requirements is necessary at this time?
Look, I'm going to react to whatever the proposal turns out to be in the end and give it my best assessment. And also, that's what I'll say.
Okay. You just also said that credit is tightening. Won't increasing capital requirements further tighten credit?
Over time, I mean, the thing about capital requirements is if we put a proposal out this summer, let's say, it'll be quite a while before that proposal is, agreed and among the agencies and then voted on, and then it will be.
SPY standing at 434.68.
So I would think, whereas interest rates, for example, have immediate effects on financial conditions and then reasonably quick effects on economic activity, capital requirements are a much more sort of medium-term, longer-term thing.
So I'd like to move on to what the impacts on lending, raising capital requirements would have. According to an academic literature by the Basel Committee on Banking Supervision, a 1% point increase in capital requirements could potentially reduce annual GDP by up to 16 basis points, showing that higher capital requirements come at a cost and could have significant impact on the U.S. economy.
Markets are not liking
Discussed
this.
with Vice Chair Barr last month, and expressed my concerns about what the impact of increased capital on the real economy, but he didn't answer the question directly. We just need to, we're hearing from all sorts of industry that these increased capital requirements at any level would have a further tightening on lending. And if that happens, and I'm hearing from everybody, if if that happens, it's going to be a real disaster. So I think anything that the committee proposes, if you could come back and brief us on before it's finalized, we would appreciate that very much, sir.
Gentleman's time has expired. The gentleman from Missouri, Mr. Cleaver, is now recognized.
Thank you, Mr. Chairman.
Wow.
Welcome, Mr. Chairman. Thank you very much. This is probably Economics 101, but a lot of people in my district are misunderstanding 101 along with me. In May of this year, unemployment remained at 4% for the 16th consecutive month, and at 3.7%. This means that unemployment remained at
SMA 10 resistance.
or below 4% for the longest stretch in 50 years. In the U.S., the job openings rate has fallen by more than 1.5 percentage points from its peak, while the unemployment rate has crept slightly lower. In other words, the job openings decline, but so does joblessness. And I'm wondering if there was any expectation that this would occur.
Well, with the increase of job
expectation
losses.
that the level of the ratio of job openings to unemployed people has been in historic territory, all-time highs for a while now, in the last year or so. And there is an expectation that it will come down. There a while ago there were 2 jobs for every unemployed person. Now we're down to 1.7, I believe, or 1.6, and that still speaks to a historically tight labor market, where the demand for labor still very substantially exceeds the supply of available workers.
Yeah, we want
do
less
expect
jobs.
as things, and that, by the way, that's a way that the labor market can become less tight without having unemployment go up.
I'm sure you're hearing this all over, as I am, and that is business people. I have a good friend who has a number of barbecue restaurants in Kansas City. And
Tristan.
he is constantly telling me how difficult
Yeah.
it is to find workers, to the point where he did something he thought I'd never do, put a sign out in front of his restaurants, job openings. And are there particular industries or sectors of the economy where we would expect this sentiment to be
Spy at 430,
particularly
452.
true?
No, and that is right. That is, there's still a significant labor shortage. The surveys at the aggregate level show that it's not as bad as it was 2 years ago. So gradually, businesses are reporting that they're having better able to find workers. Workers are reporting that they're not quitting their jobs as much as they were. That's a really good sign of how tight a labor market is how much people feel free to quit their jobs voluntarily. So those things are all suggesting a gradual cooling and a gradually getting supply and demand back into alignment, but we're not there yet. We still have a significant excess.
We still want more jobs
demand over supply.
to go away. Wow.
Are we also finding that I know in Missouri, that in spite of the fact that there is some
Man.
jelly-like movement with the economy,
Slight recovery on the markets, 430, 487 on SPY.
to go and our community is still willing to go out and buy homes. I mean, we're not having difficulty in terms of people going out getting loans, even with the interest rates rising. If all of this continues, if the consumers are constantly paying whatever the interest rates might be, are we going to get stuck just continually going up?
Well, no, I don't think so. So in housing in particular, there is the housing sector nationally has flattened out and maybe ticked up a little bit, but at a much lower level from where it was, with rates as high as they are. So supply and demand there are getting back into alignment. And I do think that housing inflation
Maybe.
is set to come down as we move forward. There's a particular way that the inflation is calculated there, so that you're really
I don't think the housing market's going to pop anymore.
You're waiting for leases to come due and roll over at much lower levels of increase. So we think housing inflation will be coming down significantly over the course of the rest of this year and next year.
Thank you, Mr.
Agreed.
Chairman.
Gentleman's time has expired. The gentlewoman from California, Ms. Kim, is recognized.
Thank you for recognizing me, Chairman. And Chairman Powell, thank you for joining us. I appreciate your comment to price stability and commend your
The markets are
efforts to
reacting.
reduce
435.02
inflation and make
on
life
SPY.
more affordable for all Americans. Thank you for that. The 10,000 small businesses survey of 2,000 small businesses found that 77% were concerned about their ability to access capital. So with that in mind, do you think it's appropriate for the Federal Reserve to increase capital requirements at this time? And I know this was discussed earlier, but what specific
Tristan.
analysis has the Fed conducted so we can determine the impact of this warrantless regulatory action on small businesses and other marginal borrowers?
So with capital standards, it's always a trade-off. The more capital means a more stable, more sound, more resilient banking system, but it also at the margin can mean a little bit less credit availability, and also the price of credit can be affected. And there's no perfect way to assess.
Yeah,
that
stop giving out
balance.
loans to.
Obviously, the answer is not zero capital. It's not 100% capital, so it's somewhere in the middle.
Thank you. There are estimated about 1.5 trillion of commercial real estate loans that are maturing in the next 3 years. And declining
Wow.
demand and the prevalence of work-from-home policies are putting a strain on commercial real estate market. The bulk of commercial real estate loans are held by smaller and regional banks. So is the Fed thinking about policies that could provide time for commercial real estate loans to be refinanced? And could an increase in capital requirements reduce liquidity in the commercial real estate loan market?
That's a great concern.
We're very focused on the commercial real estate situation. You're right, of course, that a good portion of the commercial real estate loans are held in smaller banks. And supervisors are very much engaged with those banks, and it's particularly banks that have a high concentration.
SPY holding the SMA 10,
That's what
we're
we
doing
look for
good.
among the smaller banks, and there are
435.02.
some of those, but there's a playbook for working your way, working your way out of these loans, and it's particularly in the office sector where work from home is still a pretty material factor in some areas, as you know.
Thank you.
There we go.
So the next question has to do with the board process and procedures. What are those procedures that govern consideration and potential adoption of matters like the proposals that Vice Chair Barr is about to present to the board?
So on regulation, as opposed to supervision, on regulation, the Board of Governors votes on regulatory proposals, and it's a majority vote. We now have 6 voters, so when there is a proposal, it will be briefed carefully, and then we will have we'll have a meeting, or it can be done actually virtually, and probably will be that way.
We may
as
have
most
low
our
of day
meetings
on
are, and
SPY.
then we have a vote. On supervision, it's different. Most supervisory matters are really under the authority of the Vice Chair for Supervision under the law. So most of them don't have to go to the board for a vote.
So what percentage of the governors must vote in favor?
Majority.
The majority of them? Okay. The California governor, prior to the depositor bailout for SVB, reportedly identified that he had been in touch with the highest levels of leadership at the White House and the Treasury.
Whatever's being said, the markets like it.
The governor
435.38.
also, on Sunday, March 12, when the bailout was announced, issued his own statement praising that action. There have also been reports that the governor and his wife, with respect to their business and perhaps other interests, may have had depository interest in SVB. So when the Federal Reserve Board, the FDIC Board, and Secretary Yellen, in consultation with the president, recommended invoking the systemic risk exception for SVB, and then decided to provide blanket insurance even on uninsured balances, did the Fed or any others, to your knowledge, perform any conflict of interest due diligence?
No, I mean, we were in an emergency situation on Monday morning. There was going to be, and there was a run on banks that looked, that
So
had
looking
high
back,
insured
do you think there
depositors.
was any
We carried out our
Yeah.
duties, and I'm actually pretty sure we did the right thing.
Ladies first, yeah?
And you don't think there was any conflict of interest, even looking
I
back?
have nothing. I have absolutely no knowledge on that.
Okay. Well, thank you. Thanks for being here. I yield back the balance of my time.
Gentlelady yields back. The gentleman from Texas, Mr. Gonzalez, is recognized.
Thank you, Mr. Chairman and Ranking Member. Thank you, Chairman, for being here with us this morning. The June Federal Open Market Committee report indicates inflation in the U.S. and abroad continue to ease but remain elevated. In response to
Probably
the
doing good.
FOMC that has the proposed interest rate increases up until June 14th, recommendations to pause interest rate hikes for the first time this year, research has shown that the effects of monetary policy decisions, like raising interest rates, can take, on average, 42 months to be realized fully in the United States, meaning we may not fully understand the effects of this first increase in rates of March 2022 until next fall. With that in mind,
It does take a year.
how have our recent tightened monetary policies impacted the strength of the U.S. dollar and how it is valued globally?
Let me say that there's a lot of uncertainty around how long it takes monetary policy to affect real activity. There's no agreement on 42 months or any particular thing, and I think most people would say shorter than that. So you're asking how it would affect the dollar?
It would be 18 months reactive.
First of all, the Treasury Department has responsibility for the level of the dollar and the stewardship of the dollar as a currency. We don't actually comment on that. We don't look at any particular level. It's just another, to us, it's a financial condition. A stronger dollar means certain things, and a weaker dollar means certain other things.
That's right. There's an inverse correlation to that. Weaker dollar right now equals better economy.
Also, Chairman, as you're aware, the Federal Reserve's core mission is to keep employment up and inflation down. Although I understand the calls for climate-related financial risk management from my colleagues, we should be focusing on the economic state of our country. The credit of the U.S. dollar is at jeopardy, and as you know, we've had global pressure recently, and we need to be sending a clear message that the world can rely on the full faith and credit of the United States dollar. We should be focusing on mitigating the calls to reduce dependency of the U.S. dollar. Monetary policy changes implemented in the U.S. are likely to cause a ripple effect throughout the global economy. With that said, would you agree that monetary policies to directly address climate change should be made by Congress and not the Federal Reserve?
Dollar looking weak.
And implementing monetary policies and supervisory tools to exclude energy leaders from capital and financial institutions would have a grave impact on local, state, federal, and even global economies?
A strong agreement around the fact that we have quite a narrow role in climate change, and really the important decisions about climate change need to be made by elected people, not by the Fed.
Thank you, and I yield back.
He washed his hands off that.
Gentleman yields back. The gentleman from Florida, Mr. Donalds, is recognized.
Thank you, Mr. Chairman. Chairman Powell, thank you for being here. Really appreciate you being here. Look, I got to say, first of all, it was good to hear from the other side of the aisle that the Federal Reserve should not even be engaging in using its tools with respect to climate change or climate mitigation or whatever the case might be. The Fed, you guys have a big enough job as is. Adding anything like that to your job, I think will be wholly detrimental to the American economy. So I, for one, this morning am glad to hear that coming from the other side of the aisle. You've had a couple questions already on capital, bank capital, et cetera. Look, some of the current views are that continuous raises of bank capital will increase costs to our economy anywhere from $50 to $200 billion. What's your view of the current desire or mode of Vice Chair Barr to fully implement the Basel III capital standards?
Well, I think that's the next thing. Vice Chair Quarles was working on that. It didn't get completed for various reasons, but I think that's an international capital standard that we should go ahead and complete. As to the right level of capital, that's a discussion we're about to have.
Are you guys at the Fed? Are you guys kind of concerned about the fact that now it seems like the European regulators are starting to pull back from that? Like they're starting to think about capital standards being too much for European banks, and that they're starting to receive from what was, I assume, kind of a handshake agreement in years gone by?
Yeah, I'm not hearing that exactly. We'll be watching that carefully, though.
Okay. Overall, just with respect to capital, I mean, let's take a step back. Obviously, since 2008, 2009, we have, in my view, aggressively gone through this process of increasing capital standards and capital requirements on a tier 1 capital for banks. In retrospect, do you think that's been a net positive to the overall banking environment, or do you believe it's been a negative to the overall banking environment?
I think it's been a net positive, and as I pointed out earlier, U.S. banks have competed very, very successfully through this period, despite what were pretty significant capital increases that we put in a few years back. So it really has led to a very strong, and also made it well through the pandemic period, I thought, and I think that was a pretty good test. So even though the government did do a lot to support the economy, still, I think that those capital hikes that we made in the last cycle come through looking pretty good.
Do you guys at the Fed, do you have a view of, I say you guys because I know you're the chairman, but there's other members as well. Do you have a view of the concern about community banking in the United States, or a lack thereof of community banking? It has been shrinking quite significantly over the past 10 to 12 years.
Very much so. It's a focus for us. We understand the importance of community banks, that they provide a different service and a really important service to smaller businesses and communities. And community banks have been consolidating for 30 years now. So it's really a secular trend as people have moved to bigger cities and things like that. But
SMA 10 converted into support
to move that along. We think that the world's not a better place with fewer community banks, and we try to keep that in mind in all of the regulatory and supervisory things that we do.
Do you think that federal regulatory policy, in part from Congress, has led to a supercharging effect of diminished community banking in the United States?
It's probably been a factor, but I do think there have been important demographic factors as well. And also having interstate banking. Interstate banking only became legal quite recently, and that also has led to consolidation. You can look back, though, look back 30 plus years, and you've seen a very steady decline. So I think there are demographic and other factors driving it, but regulation can fall as a fixed cost, which means that institutions need to be bigger, and I think that's probably part of the story.
Look, I don't disagree with your conclusion. I'm just concerned about the trajectory. I think just having larger financial institutions, larger banks overall, with a diminishing smaller community bank infrastructure is detrimental to lending to small businesses, mom and pop businesses. It also could be parochial. I started my career in community banking, so it's a heartfelt situation. Last question, running out of time. The SEC has proposed a rule that would, among other things, require banks to segregate client cash held in custody, upending custody bank balance sheets, and by extension, the bank custody model. Are you guys at the Fed concerned about this proposed rule from the SEC?
The gentleman's time has expired. The chairman can
I'll respond to
in
that.
writing.
Okay, fair enough. Thank you, Mr. Chairman.
The gentleman from New York, Mr. Torres, is now recognized.
Thank you, Mr. Chair, and thank you, Chairman Powell. As you know, the U.S. has foreign adversaries, particularly the CCP, that seem intent on de-dollarization. How seriously should the threat of de-dollarization be taken, in your view?
Well, the status of the United States, of the dollar as the world's reserve currency, is a very important thing to us. I think the reason we have that status is largely due to our great democratic institutions, the rule of law, and the fact that we have, generally speaking, had strong levels of price stability. And I think that the dollar will remain the reserve currency as long as those things are in place.
Well, I want to explore that answer, because commentators often speak of the dollar as the world's reserve currency as the cause of America's economic dominance. Do you think of it as the cause of America's economic dominance or as a consequence of it?
To me, it's more of a consequence. And also, there tends to be an equilibrium where one currency becomes the accepted global standard, and that has been the dollar for some time, and I expect that it will be for some time, continue to be.
It's often said that the Fed has a dual mandate of maximum employment and price stability. Do you view these mandates as equally binding upon the Fed, or does one supersede the other?
They are perfectly equal under the law.
And I'm curious to know what it means in practice to have a 2% inflation target. The latest pause notwithstanding, does it mean the Federal Reserve will continue raising interest rates until the 2% target is reached, even if doing so
Good question here.
comes at the expense of maximum employment as
Keep
well
your
as
eyes on the
financial
spy.
stability?
No, it doesn't mean that. It does not. So the way we think about it is most of the time the two goals are aligned in the sense that if you're achieving one, you're achieving the other, and if you're a little bit off, the other one, they move in the same direction. Today's situation is unusual in that we are overachieving, in effect, the maximum employment goal, but we are far from achieving the inflation goal. So in our system, we have a constitutional document, and what it says is that when that's the case, you look at how far you are from the goal, and you look at the speed with which you would move back to the goal. And so that would tell you today that we should focus heavily on inflation, but as it becomes closer, as the two things become more aligned, then they go back into perfect equality under the law.
So the Fed engages in a delicate balancing act between employment and inflation.
Yes.
To what extent do you factor in financial stability, safety, and soundness when raising interest rates?
So you're right. We do have a financial stability mandate, but we try to.
Well, you have a financial stability mandate with respect to your role as a bank regulator. But when it comes to
also just generally, we're the lender of last resort. Central banks were originally created to support the financial system in times of stress and to make sure that you don't get into times of stress. So I would say that, sorry, what was your question before that?
to what extent do you factor in safety and soundness when setting interest rates?
Sorry, so we really try hard to use our financial stability tools for financial stability purposes and our monetary policy tools for monetary purposes. The reality on the ground is much messier than that.
No reaction from the Bears or Bulls yet.
And one affects the other, so the separation is not at all perfect. But we do think of these as separate things with separate tools.
Do you think that the Silicon Valley bank failure revealed a deeper tension between the safety and soundness mandate of the Fed as a bank regulator and the mandate of the Fed as an administrator of monetary policy?
Wow.
I would say no, and I'll tell you why.
Of course, no.
Interest rate risk is, one of the most basic banking risks. We supervise for it. Overwhelmingly, U.S. banks did manage their interest rate risk. Silicon Valley Bank didn't, and even though we were, the supervisors were pointing that out to them, they just didn't take, the bank didn't take action quickly enough. So I would have thought that you can say that it was interest rate hikes that caused portfolio losses, but it was management that failed to hedge against those losses and failed to hold appropriate liquidity.
In the pre-COVID world, we had the best of both worlds: low unemployment, low inflation for decades. Do you believe that we could return to that best of both worlds, or are high interest rates a new normal in the American economy?
So we will return to 2% inflation and maximum employment. What will be the level of interest rates there? That's a really good question. And
do you suspect it's going to settle at a higher level than we've known historically?
I think it's really hard to know. It's a great question. We talk about this a lot. The people who argue that they will move it back down just point to the fact that it was really global factors that drove rates down in the first place. Maybe the truth is somewhere in the middle.
Gentleman's time has expired. The gentleman from Nebraska, Mr. Flood, is recognized.
Good questions.
Thank you, Mr. Chairman. Chairman Powell, I'd like to discuss the continued efforts to unwind years and years of quantitative easing and what it's done to our Federal Reserve balance sheet. If you take a look at the size of the Federal Reserve's balance sheet since the 2008 financial crisis, we've seen an alarming increase from around $800 million to today's $8.3 trillion in assets. Back in 2018, you did start the work of winding down the balance sheet. You managed to offload roughly $700 billion in assets between the beginning of your time as Federal Reserve Chair and August of 2019. The problem was, shortly after your efforts began, we had another major economic shock, the COVID-19 pandemic, that caused the Fed to once again return to quantitative easing as a form of economic relief. Pretty soon, the Federal Reserve's balance sheet had increased another $4 trillion in size. That's how we made it to the balance sheet level that we are at today. I understand you have started working to shed some of the Federal Reserve's balance sheet, and I appreciate the work. That being said, the scale involved here, to me, is startling. My concern, Chairman Powell, is that efforts to shed assets from the Fed's balance sheet have never been anywhere as quick as efforts to build it back up. Our economic cycle does go through recessions from time to time. It's not always boom, but some bust too. If we continue a pattern of rapidly building up the Federal Reserve's balance sheet in bad times and slowly shedding assets in good times, we're going to see the balance sheet grow significantly over time. Chairman Powell, is this a concern of yours? And to pair with that question, long-term, how can we avoid an environment where any effort to unwind the Federal Reserve's balance sheet is undone anytime there's an economic shock?
It is a concern, and that's why we are this time the balance sheet roll-off is much faster than it was back in the first episode. We also know more. We hadn't grown our balance sheet like that, and we hadn't shrunk it before. Now we have experience with that. So we are moving back down to a level that will be appropriate for our new framework. By the way, we won't go back to a framework where we were dealing with scarce reserves. We like the administrative rate framework that we're in now. But it is important that the balance sheet not just grow with every cycle, and I think I'm very conscious of that.
Chairman Powell, do you have an optimal Fed target for the size of what the balance sheet should look like? A number?
I'll give you the idea, and that is, you find the number, but the idea is that it's smaller than now. It's a place where reserves are abundant, and also have a little bit of a buffer on top of that so that we don't accidentally run into reserve scarcity. Demand for reserves can be volatile, and you don't want to find yourself, as we did a few years back, suddenly finding that reserves were scarce, even though we didn't see it coming, and we then had to put more reserves into the system at a time when we didn't want to be doing that. So I think you want to have a level where we have ample reserves plus a buffer, and that'll be a % of GDP that we get down to, and we're moving in that direction pretty smartly.
Chairman Powell, realistically, how quickly can the Federal Reserve unwind its balance sheet? What's the threshold beyond which an asset sell-off by the Federal Reserve would disrupt our markets?
So we don't sell assets. What we do is we allow them to mature and passively roll off, and that's what we're doing to the tune of about $1 trillion a year. And we're in the middle of that process. Now we will, it's an empirical question, you're going to find a level that is still ample, plus a bit of a buffer, and that's how we're thinking about it.
Thank you, Mr. Chairman. I would just reiterate my concern on this issue. I fear that having the Federal Reserve backstop so much of our economy through the holding of treasuries and mortgage-backed securities is not sustainable long-term. Thank you, Chairman. I yield back.
Gentleman yields. The gentleman from New York, Mr. Horsford, or Nevada, Mr. Horsford is recognized.
Thank the chair and the ranking member for holding
I
this
think
important hearing, and thank you.
I think we got all the answers
committee today.
that
Before I
we
begin,
needed.
I'd like to ask permission to enter into the record editorial by
Let
the
me
Las
go ahead
Vegas
and,
Sun entitled "Economy Infrastructure Thrive When."
Yeah, you guys, I think we ended up getting the answers that we needed. The markets are definitely not liking what's being said, but I think it's just temporary. We may actually use this. I mean, we were seeing this potential drop on the SPY to around, let's see, this was the initial support level that we were looking for, right? 433.85. We're well within that right now, and I do think that that's a pretty good zone for us to either capitulate or find support, because this is an inflection zone, right? So if we fail, we were speaking about this yesterday. So if we're failing a daily candle beneath the zone of about 433.61, then the markets could face a deeper correction here to around 429.75 at the top side of the daily support, right? So I think the Fed is being pressured into a lot of questions that I don't think they're going to be able to answer right now. A lot of what they do is essentially reactive to current market conditions, and they often don't use systematic metrics to determine their future resolve, right? So when you're looking at things like that, you're you're kind of in no man's land, right? You're kind of walking blind, and you don't know where you're going. We're at the mercy of Jay Powell here, right? So whatever he does today is going to affect the price. I'm sorry, it's going to affect the economy a year later. So if they raise interest rates by 25 bips or 25 basis points on this next Fed meet, then it's the economy is going to be reactive to that about a year later. So it takes a bit of time for us to identify whether we're in a pivotal mode, or if we're still in a correctionary mode, or if we're or recessionary mode. We don't know, right? So I mean, but whatever they've done thus far, all these rate hikes that they've done has led to the disinflation thus far, right? So at least they're doing something about it. I think it's all good, but as soon as we can start really feeling a Fed pivot here, then the overall markets are going to start making it a little easier for every asset, including the small caps and micro caps, to start to start allowing them to essentially grow, right? But as long as they do have the support from the broader the indices and all that stuff, right? But if we don't have that, guys, then we're going to still face a consolidation period within the broader markets, which is, again, guys, that's range trading, right? And you're not looking at an overall bullish market, which is very, very difficult, right, you guys? But I mean, right now, guys, the SPY has been rallying just like the broader markets for quite some time, right? We have at least a few weeks here of upside. The downside that we're facing right now, I think it's healthy, right? Just like these periods where we would run, come back down, test that EMA 55. We have another EMA 55 test, continue on to the upside, and then we would correct again. So these cycles of correcting down to the EMA 21 or 55 are not rare. Okay, so we definitely need to come back down to these moving averages to validate that we are currently within an uptrend. And but remember that this is essentially in respects to whatever Jerome Powell says. Okay, you guys. So in this case, I can see that we're retracing a pretty nice retracement back to the SMA 10. This is why I have the secondary support, okay? There's always the possibility of coming back down to the EMA 21 or the 55. In this case, I did see the top side of this support being the higher likelihood, but we seem to be holding pretty nicely right now at that 40-35 level where the SMA 10 is sitting, okay? So we're going to have to give this a serious eye right now, right? And the reason why we popped the Fed up today, guys, is because we want to know where the broader markets are essentially going to go, right? We have to see what that broader sentiment feels like. So far, it looks like still a little bit of indecision. It feels like they're kicking the bucket down the road just ever so slightly further, right? So, and I think it's really, I think it's really in respects to not say too much, before the next CPI, which we're really kind of focused in on, right? We want to see if we're continuing to ease. So if that's the case, guys, then we may be trading a range for the next maybe 2 weeks. It's not a bad range. It actually still has a pretty substantial range, right? So I'm talking about the SPY sitting at about 2% or 2.3% to the upside, if that's the range, right? If we go back down to the EMA 21, then you're looking at about a 3.30% upside on that, right? So it presents a good opportunity to range trade, but it doesn't present a good opportunity for overall growth. Okay, so keep an eye on what the Fed says always, you guys. Okay, you guys know how I trade. You guys know that I don't usually use fundamental metrics, but the macroeconomic metrics are definitely something that I keep in mind, and this is why I kind of encouraged us to take a look at what the Fed was going to say today, right? So thank you, everybody, for watching that with me. Let's go ahead and take a look at other plays now that we know where we're kind of sitting in the broader market spectrum, right? So, yes, actually, you know what? Earlier, Monster Mike was talking about ticker symbol WULF, and that ticker, guys, this is in respect to the Bitcoin miners, okay? So this has absolute power, and I still have to favor. Of course, we may have reached high of day right at this target right up here, which was about 175. It looks, about 175. I still have my eyes targeted on this top side resistance here, right? So 188 to about 201, and that is in respects respects to the broader, to the Bitcoin CME futures and spot price action. Both of them are suggesting a continuation to the upside, which opens up a pretty good opportunity for a long play. So this is why I'm saying that tickers like Wolf and tickers like MARA are also going to be making their rallies to the upside, which because they're influenced by the price action from their what you would consider their index, right? Bitcoin, right? So yeah, it's looking very good, you guys. I do see. I mean, if we can have ever so slightly a short-term downside here, then we can actually come back down and test the area of about $1.62. But I don't see that as likely just yet, you guys, as we have momentum pivoted towards the upside on several time frames. 4-hour time frame suggesting there could be a support down here at the SMA 14. Let's take a look at our moving averages to see what that could be. All right, so this is literally what we were just talking about, right? We have the EMA 7 sitting right at 162. Very possible for price action to come back down here in the next probably 2 to 4 hours and bounce off of the support here before continuing on to the upside, right? So another thing is that we did kind of gap up in the 4-hour time frame, so we created this this zone right up here, right? So I'm going to mark it off just real fast because we're going to have to keep an eye on that when price action does decide to kind of reverse here, right? This is likely going to act as a resistance since it was initially a support from a gap, right? So yeah, keep your eyes on that gap range, 171 to 174. So that's very good, you guys. Okay, so Monster Mike, I hope you're still here. I hope you were able to kind of listen in on what we were talking about in respects to ticker symbol WULF, right? So we have a few tickers to kind of keep in mind, right, you guys? But real fast, okay, the markets are still kind of holding the TQQQ, finding that support from the SMA 10. That's what we wanted to hear. Okay, so now, you know what? We have to touch down on a few tickers. Which one was that? Let's see. I know that there's a few people that were talking about a few tickers here. Well, hey, what's up, DeBled? How you doing? What's up, Teaser? How you doing, man? The greetings from Spain. Yeah, man, nice. So happy to hear that you're chilling out there, man. So let's see. Arca, did you already cover SONN? Why don't we do that? Let's go ahead and take a look at ticker symbol SONN to see how far it has moved on the day, right? So we were talking about a potential pullback to around the 50-cent zone, 55, right? So let's see if we got that. In fact, check it out, you guys. This is exactly the trajectory that we were talking about yesterday, right? We got those zigzags, and we were speaking of the high potential that this would likely find a downside and a continuation of it, right? So we actually did get that. So yeah, man. So let's go ahead and see, right? Yeah, essentially what I'm trying to say, you guys, is that these are those ladder attacks that we were looking at, and what you're seeing here is, in fact, 1, 2, and now, just like I said, we're on that third one. This is why we marked off our support, guys. This is our chop zone, right? So we were looking at a potential drop to this area here. Mind you, this was just about 4 hours ago that we touched that, right? We came right back down to this area. I was honestly thinking that we could reach my personal target of about 5507 first, but that didn't happen. We actually reached the top side of my support at 5748, very close to it. But what I'm trying to say here is that there might still be a continuation to try to reaccumulate here before an upside. Okay, you guys. So this is still looking pretty good. The price action is absolutely, guys. We expected this. Okay, so 1, 2, this is 3 right now. If we're gonna face a fourth, guys, there could be that bottom side support to this wick down here at about 5230. Right, we can get that wick down to 5230. Then we will create that fourth ladder, which would essentially introduce the potential of recovering from that point. Usually we start to get recoveries upon that fourth or fifth wave, right? So keep your eyes on that. I'm definitely keeping my eyes on it, right? Because I'm covering SONN. Another way that you can kind of tell here that there could be a loss of bear strength is for the simple fact of this. Check out your RSI on the 4-hour. We're starting to get this curvature here, right? So that's always a good thing, you guys. Also, stochastic momentum not pivoted so aggressively towards the downside. We're finding some type of resolution here, but that does not mean that we can't still continue to the downside. It just means that we have slowed the downside, and that's a good area to be in, because this shows us that we could have potentially found a floor, or we're approaching one, right? So this is why I have these targets here, you guys, is just for us to evaluate potential areas of invalidation for us to continue, right? Like I said, we don't want to close a 4-hour candle beneath this wick low, which is I'll give you the exact value. So that's 52.33. We do not want to close a 4-hour candle beneath 52.33 because we're going to start getting introduced to some shorter time frame downsides, which would then further increase the probabilities of continuing to the downside on the larger time frames. Okay, you guys. So that's a very important target to keep your eyes on. Okay. Let's go ahead and refer back to the chat here and see what's going on. Rosie Gary Glass is saying CLNV having a wow. Yeah, we were actually just looking at that yesterday and started noticing that there was the possibility of starting to see an upside, right? So, wow, look at this. The 4-hour MACD facing to the upside, getting its first green bar. We have finally crossed, guys. Damn. Okay. All right. So the 4-hour time frame is contracting with an upside pivot on stochastics. This is immediately a play. Okay, so let's see the hourly time frame upside by hourly time frame, still showing that slight ebb and flow, right? But yeah, we're gonna go ahead and take a look at that VIRI right after this. Let's go ahead and I'm sorry, I know I have a few people here waiting too, but yeah, we'll continue. We still have to look at MULN2, right? But I hope you didn't switch back to the dark side, says the Bled. No, I'm still on a PC, you guys. This is the good news, right? So yeah, yesterday, you guys, we were talking about the potential resistance zone of about 0.334 and 352, right? We got very close to that. In fact, we reached around 329, 328. So that's very, very good. What's up, Indra? How you doing? Thank you so much for your donation. You are so kind. Thank you. And you, with the super chat or super thanks, you're saying for all the time you dedicate to the streams and to your students, guys, you mean everything to me. Of course, we have to do this. We have to make sure that we can provide for our families, right? We don't want to gamble our family's capital on just nothing. We got to be as educated as we can be, right? So we can play the financial markets responsibly, okay, you guys? But yes, Indra, thank you so much. You are so kind. I will always be here for you guys, okay? So, yeah, guys, CLNV immediately became this play here upon getting the 4-hour condition that I usually look for. On the 4-hour, I usually look for that upside momentum on both the EMA3 and the SMA14, which is great. Okay, so now moving up to the 6-hour time frame, upside pivot, contracting volatility, nice. Okay, 8-hour time frame, we have upside pivot and contracting volatility as well. Look at that RSI and also that MACD on the 8-hour, guys. This is starting to look very, very promising. Of course, we know historically speaking that CLNV can get smashed at any moment, right? But I did hear that there could potentially be some the end to some dilution here, so which is also a very bullish thing for the asset, right? So could we be creating that pivotal V-shaped recovery right now? I'm not sure. It's a little bit early to tell. But what we can do is look at the daily moving averages to see if there's anything above us of high relevance, right? So in this case, we definitely faced the resistance from the EMA 21, and now we're using the EMA 7 and 9. I'm sorry, the EMA 7 and SMA 10 as a form of support, which is great. Okay, we definitely want to find those supports there because then you're going to start getting the convergence of both of these moving averages, in fact, including the 55 as well. So when we start getting that, you guys, that means that we're knocking at the door of resistances and we're looking to convert these moving averages into supports. Okay, so this is a very good sign for CLNV. And you know what? There's a little bit of a concern here on the daily time frame. In fact, there is a bearish divergence when you're looking at volume versus price action, right? Please notice that we have volume with a decline, while price action with an incline, right? So that usually marks off a little bit of weakness to the bulls in particular, right? So that is likely why we face this sell-off, not only for the fact that we had a resistance right up here at about 334, but also because of the SMA 21 and also because of the dropping volume, right? So watch out for that as the daily volume has now fallen beneath the moving average. Okay, so keep an eye on that. Okay, you guys, this is also something that you should pay some mind to, right? When trading, right? You want to notice your volume profile. Your best forward-looking indicator would be price action versus your volume. Okay, you guys, this is one of the metrics that you should always keep in mind when trading. Okay, you guys. So now yeah, let's go ahead and refer back to the chat to see what's going down, right, you guys? So very happy that we have some people joining us today, right? So now, what's up, Bad R? So saying, let's see, any ticker curling up at the moment, looking for a juicy entry. Actually, moderator Sebastian Lim was speaking of a ticker earlier today that was just ripping to the upside, right? And I think that was I forgot what ticker that was. Berenson, how you doing? What's up? Sebastian Lim, if you're still here, go ahead and type in that ticker that was it AHI? I think you said. I'm not sure if that was the one, but if it is, I mean, we can give it a quick little AHI, right? So let's give it a quick look here and see what's going down with that. So, oh my goodness. Wow. Huge gap up. Why? What's going on? So about 13 minutes ago, NASDAQ leads U.S. stock. Okay. U.S. stocks decline for a third day as investors focus on Powell's testimony. Of course, this is what I said earlier, right? It's just not based on Powell. So, why is, okay, down at 8% today, 2 hours ago. Stock is not down. What's going on here, you guys? You are not, people dropping the ball here. Let's see. Why is Advanced Health stock up 123% on the day, right? So, okay, so there is some type of news to this, right? So, the company's daily average trading volume at about 3.8 million. Okay, if that news is really that bullish, this could be just a temporary rise, right? So, yeah, keep an eye on this one. Put it on your watch list, as this could be making a recovery here to continue on to the upside. We're also getting a very interesting golden cross, which is actually the SMA 50 over the 200. Right, here we go. Let me just go ahead and put that in so that we can see, and that is this cross right here. Okay, you guys. So it looks like we got the cross just recently, literally today, and we're reacting to that, okay? So, but oftentimes, we're going to wait for this SMA 50 to come up to the price action and eventually come back down to test it, which may actually present an opportunity to get in this asset at 80 cents, okay? But this is huge, $1.96 currently right now, okay? Keep your eyes on that, and don't trade it with FOMO, okay, you guys? Only because it's up doesn't mean it's going to continue. All right, so let's see. Indra saying, oh, yes, I saw that too. Yeah, huge price action. So OCEA is another one that moderator Sebastian Lim is saying to keep an eye on, right? So let's go ahead and pop that one open and see what's going on, right? So, yeah, OCEA, huge gap up on the day as well, as this could have presented some news too, right? 22 minutes ago. Okay, so, yeah, we have some news coming out. Let's see, on Fundamental Research Report. Okay, all right, so if we're getting, let's see, oh, okay. Got it. Yeah, I mean, guys, to tell you the truth, a lot of these times is just waiting for a piece of good news to come out, make the asset rally, and then come back down. And the way you can tell that is if you zoom out and start to look at the recent price action. Let's get rid of the moving averages, right? Just like this. Go ahead and take a look at how many times we've actually wicked to the upside like that, right? You have one right over here, right? You literally have another one right over here. These are daily candles. Another wick over here, another one over here, just like this, right? So it looks like this is and another massive one right over here, right? So it looks like there's a lot of play within that. And if I'd have to let's see, probably on its way back to the daily mean. Yeah, exactly, man. That's exactly what I'm talking about. I think that these are just some of those, I don't want to say pump and dump because I'm not sure who's really covering these things, and I just, it's none of my business really, but it looks like it's one of those situations to where just liquidity grabs somebody and it just kind of leaves bag holders here, right? It grabs liquidity so it can go ahead and continue consolidating before another run on some other type of potential catalyst, right? So go ahead and always notice what catalyst is it, and is it really valued at that level, right? So if you see this current news that's coming out for whatever asset you're trading and it doesn't sound like it should hold that topside target, then because of this like tiny piece of news, then you know it probably isn't, right? So we don't want to continue getting long tickers like that. Don't worry about Wolf, bro. Okay. Let's go ahead. Yeah. Okay, perfect. Anyway, so I'm not sure. I think somebody mentioned something else about another ticker. Let's see. Wasn't really bad news, but it felt like, yeah. I do hear that, but really any news is actually going to move the price action, right? And it's up to us to determine whether we're going to be at that level of support or resistance to where the price action can be reactive to the upside or downside, right? So this is kind of a way that we can determine the getting long the market or getting short the market based on literally based on current position of momentum, right? So before this gap up here on the daily for ticker symbol OCEA, we were down all the way back here, close to the bear strength percentile on the RSI, right? We were also in oversold territory on the stochastic momentum. So if we do get a piece of good news, that's an indication that good news could be played long. Because remember, some good news today could be played inversely, like the earnings, right? You get a good earnings and then you sell off like crazy. Pay attention to where your momentum is. Pay attention to where your current price action is sitting. Are we at a support or are we at a resistance? So is earnings going to come in? Is there a higher probability for an upside move based on our current position of price action? This is why I want to talk to you about it, right? So another thing that I do have to point out here is that ticker symbol OCEA has a very eerie, like a echo to COSM price action. That's actually encouraging me to let me see them. I want to kind of put them together here because that looks very, very similar. Let me show you. Oh man, how can I think I know how to do this. Let me see. Can we do? Yeah, we have a line. We can do actually candles too. Actually, you know what? This rise was actually very. I felt like it had a similar price action, right? I could have just been tripping you guys, but something anyway. But yeah, I'm just saying this because they're both in some type of health, right? So you never know, right? So let's get rid of that and continue on the chat here. Let's see what else is coming through. Teaser saying MULN and Very have been mentioned earlier. That's right, my dude. Thank you so much. Let's go ahead and take a look at ticker symbol VIRI, as I forgot to actually cover yesterday. Okay, did we cover yesterday during the live? Because this is the drawing that we drew, that potential pullback would come down to within this area here. So this is an inflection zone too, right? So what I mean by inflection zone, actually I would say a critical support. Right, the inflection zone itself would actually land down here instead. So the space between 167 and about 170. So failing a daily candle beneath that range would encourage or would actually influence price action towards the downside. So yeah, keep your eyes on the price action here. We do not want to fall beneath 166 with a daily candle closure, okay? Doing so can result in the price action to slide back down to, I would say, the space between 148 to around 141, which would be the next critical support, okay, and also another inflection zone, okay. So that now failing this over here with a daily candle, failing that 141 with a daily candle would actually introduce lower price targets as well. I'm not saying we're going there. In fact, we're bouncing very nicely from our initial support right here, right? So let's pull up the tools and see what kind of edge we can gain over the price action here on ticker symbol VIRI. Yeah, not a problem. We'll go ahead and check out. We'll look at first NVOS, and we'll have FOXO as well. So, Sebastian, you were talking about FFIE. Let's see. On SON, okay, yeah, we'll go over SON and price action too. We'll go back into that. And actually, you know what? I want to go back to the chat here because I do remember Lucid Heart. If you're still in here, saying hi, Arca, ignore that guy on Twitter because he's always super negative and tries to be intimidating through the screen. LOL. So many of us love and appreciate the work you do. The way I replied to that guy, man, he's like, oh, this guy here is a useless chart, has 896 moving averages and like a million triangles or something. I'm like, man, I just feel so bad for your mechanic, right? Because I'm thinking to myself, you're putting your mechanic down for having 35 wrenches in his toolbox, right? Since it obviously takes one wrench and one socket to remove a transmission from a car. So, oh man, it could have been a little aggressive. I agree, right? But thank you so much, Lucid. I appreciate you so much. Chad, I know you saw that, man. You must have seen that. But yeah, guys, anyway, ticker symbol VIRI from the immediate short term is what we want to see, right? Of course, we have a little bit of a downside here, you guys. That downside could be in respects to retouching down at this support of about 181 before continuing to the upside, right? So let's see. Oh, yeah, we're getting the 30-minute time frame is actually building a bullish formation, right? So what you're looking at here is a very, very short time frame, falling wedge here. So something like this right here is kind of what we're looking at. That breakout is coming in very soon. So initial support back down to around 181 to the space. I would say space of about 179 to 181. We'll get that bounce from that and then initiate a potential breakout from this wedge. Okay, so if we do get that breakout, we do have a couple upside targets to look at. Remember, guys, you can take those targets with a simple trend line, right? The center of the triangle. You can take one from the implied breakout, right? So we can guess that it would be in the next 4-hour candle. And then the other one would be from the top side of the triangle all the way to the lowest point of the triangle. Okay, so that would be your 3 targets to look at, right? So let's just say that we were to break out from this point here, from the next 4-hour iteration. Top side of about 216 naturally gives us a range to this top side of the 30-minute range. So 213 to 216 is the top side, right? The middle target as well, we'll apply it here and then just kind of move it to the right. And that takes us to a target of about 202. And then finally, of course, the last one, which would be the first target we would reach, and that would be in respects to, let me bring this down just a little bit like that, right? I want to try to get as accurate as I can be. Okay, I mean, it's going to be close enough, whatever. 193 is that initial target, okay, you guys? So that's how you can look at the potential target or the potential price objective is based on a formation, right? So what I do have to say is that it still is, keep in mind that it's within a 30-minute time frame, and the shorter time frames present invalidation more often than not. So a lesser strike rate for these formations, right? As they're often backed by mostly psychology and not mathematics. Okay, you guys. So let's go ahead and now refer to the next ticker, right? We were taking a look at. Okay. So actually, let's rearrange that because I got the first inquiry here for SONN. So I'm just gonna go ahead and touch on that target, NVOS, and then we're gonna look at FOXO. Okay, you guys. So tools are cool. Yeah, man, they're very cool if you use them right and if you know you have them there, right? So maybe consider using some duct tape instead of the bubble gum. But anyway, yeah, let's go ahead and pull up ticker symbol SONN one more time, right? So as I didn't mean to miss that question earlier. I just totally dodged it, though. So let's see. The question one more time was, Arca, please, if you are still bullish on SONN, what would be the next price target, right? So actually, the price target that we were looking for was already met today, right? So this was within the area of 5507 to 5748. Forward looking from here, there is still one more potential for us to face a continuation to the downside. As you can see here in the 30-minute time frame, we are currently building what could be a dead cat bounce, right? So when we're trading these dead cat bounces, oftentimes the lower targets are the ones to look at, right? So I think that we could go to around 5230, even down to the area of, we can even wick down back to 49.96 before actually facing a recovery, because this would essentially be on the 4-hour time frame, the fourth wave, this one here, okay, from the ladder attacks that we were looking at, right? So I think that this could be a very conservative target to look at for the immediate short term. I'm talking about even within the next session tomorrow. Right? That's if we don't even face it today. I don't think we can go down this low today, to be honest, right? But yeah, into the coming sessions, it would be a higher likelihood, right? So I would say 52.47 to around 50 cents. And I spoke about this too in a Twitter post. I think someone asked me, I think Frank maybe, and then I posted up my thoughts on that, right? So yeah, this is kind of what I'm looking at. I do still see this as part of a natural ebb and flow, right? Also, we kind of had some broader market pressures today due to the Fed speaking, so that's naturally gonna start affecting price action. Yeah, Samantha. So that is one of the formations that we learned, I think, on week number 1, and that happens when price action capitulates, just like this here, and gets an immediate bounce to the upside, creating this curvature like this, right, reflecting what would be kind of like a cat getting scared, right? So when you have this here, that is a bearish formation. And you can actually trade it by taking a trend line from the bottom side of the formation to either the closing candle valuation or the wick top. The target that I'm talking about here is particular to this target here, around 66.84. So the space between 55 let's see, 57.52 and about 66.93. That trend line here equals the bottom side that I'm talking about, between 52.47 and about 50 cents, right? So that's why I'm saying that can essentially realize, then we can get a bounce to the upside. So these formations just have so terrible names, right? We have the abandoned baby, the hanging man. Like, what's going on? Right. So, and these are traditional. I'm talking about they've existed forever. My finger looks kind of dead today with volume. Oh, you're talking about FNGR. Oh my goodness, man. Things can happen, right? So you still bullish on Tesla to the 300 range. Oh, wow. So yeah, that was actually something that we need to take a look at too. But remember, guys, we need to follow up with the next tickers here. We have now ticker symbol NVOS. Let's pull it up real quick and see what's going on, right? So NVOS is the next ticker here. And this is something that we spoke of just yesterday. Oh, wow. Okay. I mean, I did say that we could come back and test a newly converted resistance into support, right? But in this, I mean, I didn't expect it to happen all in one candle. So let me go ahead and pull up a higher term here and take a look at it. I'm sorry that it's a little convoluted right now. It was based around the play that we were taking a look at, right? So we can actually get rid of some things right now, right? As we clearly surpassed those metrics already, right? So yeah, this is the breakout that we're looking at, you guys, from a falling wedge, right? Oftentimes when we break and when we break out of the top trend line, we tend to come back and validate that as a current area of support. So we did get that retracement. It looks I'm not gonna say that it can't continue to the downside, but I will tell you that this is thus far looking pretty good, right? We're bouncing right off of the space between the 1.618 and 1.272. And more importantly, we're converting the 1.618 into a support right now. So the next thing we need is validation with moving averages. There we go. So we are now creating the, we're making that SMA 10 into support right now. We're battling the EMA 7. That's okay. And we currently have a 4-hour silver cross and a golden cross. Okay, so yeah, both of these crosses right here, these are moving average strategies, and we tested that EMA 21 already. Okay, so this is very good. It's looking okay. The breakout here has several targets to look at, you guys. So first of all, I did speak of yesterday touching down to 1558, right? That would be our resistance for the day again. I'm not sure that we're going to be able to beat high of day during today's session unless we start getting the recovery from the markets literally now, right? So it's around 9 a.m. I would say 9:30 to 10:30 is when we would see things recover that were initially facing some downside pressures, right? So like the markets right now, look, now that we're approaching that 9 a.m. or 9:30, we're starting to get that continuation to the upside right now. We're finding that support from the SMA 10 on the TQQQ, also on the SPY, the daily SMA 10. It's looking not bad, right? So is this breakout a bit early? Well, yes and no, because I'm going to tell you like this. The breakout conditions for let me get rid of some of this thing so we can see what the price action is doing, right? Like this, and then get rid of this here and get rid of the moving averages. There we go. Just at least we can keep some type of control here, right? Let me try to remove as much as I can so we can get it to be a little less convoluted, right? So you're looking at the golden rule of three playing out pretty nicely here, first of all. Okay, so we have test number 1, 2, 3, and this is true breakout test number 4 with a retest. So that's technically perfect. Now, the reason I can hear you though, the reason why you're mentioning this is because we are not at 65 to 70% to the apex. Right, so in fact, if we continue drawing the triangle to its final completion here, we can see that the current breakout that we're facing is more like the center of the triangle at 50%. Now, please remember that the typical rule that I'm talking about, let me see, 1, 2, 3, and 4, right? Yeah, remember that the typical rule that I talk about of achieving or obtaining 65 to 70% to the apex of the triangle is typically, it doesn't mean that we can't break out halfway. When we're starting to break out of this, when we're within the 30 to maybe 40%, then yeah, I would really express some concern, and that could be a serious bull trap. But in this case, you guys, I definitely think that there's still a pretty good opportunity here to continue on to the upside. In fact, we're getting a pretty nice validation of it, right? So I would. I mean, entering right now, the market's at the 1.618 is very aggressive, and I would seriously consider closing this existing candle upside of the target of I would say anything above 1436. That would serve as a short-term validation of support before a continuation to the upside. So conditionally speaking, right? As I mean, ideally it would be an 8-hour candle or even a daily, right? But you may miss out on that opportunity to get long the market within these targets, right? So that's why I'm saying a minimum 4-hour candle closure may do it for me, right? So keep your eyes on that, right? So you want to be sharp with these types of things, because if you're not practicing your risk management properly, then you can experience some losses here. Okay, so if you're going to be an aggressive trader, stop loss somewhere around 1369, right? Entry within the range that we're currently in, and hopefully we can get the 4-hour closure upside of the 1436 for NVOS before a continuation to the upside, as it's looking very, very promising. And look at this. The 4-hour RSI is at support, converting into a potential resistance now. But if you move on to the 6-hour, that's likely where that support is, right? There you go. 6-hour support found right there at that SMA 14. This is very likely where we're currently sitting, / just ever so slightly a little lower to down to the 1430 zone, which could be indicative of the positioning or reminiscent of the positioning of the SMA 14, right? So that, yeah, guys, I think NVOS is looking still pretty good. It's facing a natural price, a price fluctuation right now. So I am definitely a fan of it. I'm still looking at the upside targets here, but combating the high of day, let's see, which is I think it was right here. So the high of day is around 1540. I do not think that we can succeed the high of day today. Okay, so just keep an eye on that. Okay, but as very likely we are going to be testing now the previous day. The previous day's low, right? So this would be right over here. So that's going to be the low of 1400, and now we have a low of 1400. Yep, that's it. The previous day low is tested already. Okay, so that's essentially what we have to look at, you guys. When you're day trading, keep an eye on your previous day's pre-market high and pre-market low, and day high and day low, and that can present a potential support or resistance for the current trading day. Okay, so that's just something that you should consider, right? And also notice here that we had one of our targets located at 1399 from actually one of the take profits that we had from the short term, from the play that we put together, right? So, I mean, it's following geometrics nicely, you guys. We want to make sure that we can close above the area of 1436 before continuing to the upside. So keep an eye on those targets. Let's go ahead and continue on with the chat right here and see what's going down, right? So, did I actually say FOXO, right? We need to take a look at FOXO now. Let's pull that up and see what the good deal could be here, right? So, Destiny, how you doing? TBLT? Yeah, we'll go ahead and look into that. We're going to be looking at Tesla right after this. So, FOXO, let's see. 6-hour time frame is already breaking market structure, but what is that? Oh, I see it. Okay, yeah, this was, I don't want to say a bull trap, because this could have been seen, right? This could have been seen very clearly. So, and in fact, we probably are trading this on a 12-hour or daily. In fact, maybe even the daily. So here we go. I'm going to go ahead and start drawing in some freaking lines, man, some freaking lines. Okay, so right down here, I would say 29.49 was our major support, right? So let me draw those trend lines in and see how we can bring some clarity to this, right? So 29.49 is what we said, right? So that was in respects to right about here. Okay, and now I hate it when let me put this as a solid line, right? So, and now let me straighten that out just like this here, right? There we go. And then we have this decline, this regression line right up here, right? So just like this is a right angle triangle that we're currently facing a perfect resistance from. So this was likely to fake out a lot of people. This is not quite ready to make its breakout, right? This is test number 2, in fact, okay? But the thing is that we're approaching we're approaching the apex to the triangle sooner than later, which is applying some pressure to figure out whether the breakout's going to be to the upside or to the downside. Okay, so in this case, we have to start seeing what those potentials are. So daily time frame, we're getting a very nice pivot to the upside on the RSI. We have DMI plus increasing to the upside ever so aggressively here. And let's see, stochastic momentum is currently pivoted towards the downside, MACD to the upside. So let's see what the shorter time frames are telling us, because there's a little bit of indecision here in the 6-hour time frame. So let's see. 30-minute time frame is suggesting a bit of a downside here on the stochastics, and it could be a limited downside based on the SMA 14 of the RSI. So if that's the case, then we would potentially be finding support right where we are for a potential long entry. Okay, so or just let's see how far down we can take it. Oh yeah. We can. I mean, there is a potential of dropping to 36.28 from 38.35. That would be really the bottom side, right? And that's particular to a very short-term gap that we have right over here, right? So that's from June 1st, okay, you guys? So if there is that opportunity, then yeah, price action may actually reach down to that level there before finding a type of bounce, right? But let's see the moving averages if they agree with that. We're currently finding support from the EMA 7 and the SMA 10. Okay, so if we were to face that downside, it probably wouldn't happen for a little bit. Maybe I would say around about another 2 hours before we can face this downside here, if that's going to be the case, right? So 30-minute candles, right? They tend to live out pretty fast. And the reason why I say another 2 hours is because we can face a resistance here at the 4108. We can then come back and validate the current area, the current lows of around 3830. And that would pressure the EMA 21 to that zone, essentially right around here, where we can come back and test that 21 exponential moving average on the 30-minute and then use it as support before a continuation to the upside, right? So that's also a probability there. Okay, so this is why I'm saying that we could be at a floor soon before facing a continuation to the upside. Let's look at the hourly time frame. So hourly time frame already starting to get a little bit of a correction pivot here, but you know that I don't trust these all the time, right? So we have to keep a close eye on this. And also the pivot on to the downside that we're getting on stochastics on the hourly time frame, it's not credible enough. This is still not looking healthy enough for us to consider this a downside, right? So, but since it is suggesting a very slight downside, then again, you know, this target here is still on my peripherals, right? The 36.38. Let's continue to the bi-hourly and see what's up. Bi-hourly has that upside pivot, which is what we want to see, and increasing volatility, by the way. Okay, so let's go ahead and continue here and see if we have that 4-hour validation of momentum. So 4-hour, getting the upside here. We're increasing volatility, looking very good. Okay, so this actually, FOXO, could be ready for a type of entry here, you guys. So, and check this out. This is the resistance that we were just talking about in the 30-minute. 39.50, around 40 cents right here. We can face that resistance at that SMA 200, pull back to the area of about 36.40, and then we could get that move to the downside, right? We're already getting these signals of an upside coming in. I'm telling you, don't trust the upside just yet. I feel like it can come back down and validate another area of support, right? Currently at that 39.50, potential upside to, let's see, there is a top side to this range here of about 40.02. Okay, so we can wick up to 40.02 and then failure, right? But yeah, I mean, remember, these are shorter time frame evaluations, and they often have a lesser strike rate, right? But yeah, this is usually how price action tends to follow, right? So we get a clean break to the upside, right? Huge FOMO event right here, marking the new break of structure from the past days. We come back and capitulate down to a relevant area of support. Then we start testing around this same area that we tried to get up, right? I don't think that we're going to be able to reach the high of day again of 52.41, but it's likely that we're facing that resistance level presently. Okay, you guys. So yeah, I would if you're looking for a secondary area to long the market, then there could be, I would say, the space between 34.80 and 36.38, as this is looking very nice for the coming days as well. 6-hour time frame is starting to be reactive to that 4-hour influence, right? So this is what I mean, increasing volatility and starting to get this increase on the 6-hour time frame with an upside pivot on RSI. This is very likely to find the bottom or find the floor soon before a continuation to the upside I mean, I'm talking about as soon as tomorrow or by the end of the session today, right? So this is definitely a play that we should keep in line, maybe even put it together, right? So who found this? I think this was Buddha Mike, right? Or who actually was looking at this? Berenson, thank you so much for sharing this with us, my brother. So that is looking pretty good. So, yeah. Anyway, let's go ahead and go back to the chat and see what else we have, right? Hold on just a sec, guys. We need to kind of eyeball the markets too, right? So, yeah, we're getting a pretty nice recovery here on the broader markets, guys. I think that we could have found, just like I said earlier, right? I think we could have found that low of day, and there could be that recovery to the upside now, right? I don't want to say that we're just going to V-shape recovery from here, but I think the worst was already there. Speaking of the testimony, the Jerome Powell in front of Congress. So let me go ahead and continue on the chat here and see what else we have, right? So let's see. So yeah, guys, we need to take a look at ticker symbol TSLA, right? So, oh man, I don't know if you guys noticed yesterday, I had Apple up in the tickers that we were evaluating, right? But Apple was just ripping. Huge volatility yesterday, right? But now, anyway, speaking of Tesla, yeah. Okay. This is very important. Okay, you guys. So let me just see if the daily time frame has the RSI support. Okay, no, it's probably the bi-daily or 3-day. Okay, bi-daily has it, and that could be. Oh man. Okay. I'm gonna show you this right now. Okay, so this SMA 100 crossing above the SMA 200 on the bi-daily could signal the support that we're gonna face over the next couple days. Okay, so I'm not sure that we're gonna face it immediately, okay, because the thing is that this is 263 to around 240 something. That's a significant drop, and the RSI on the bi-daily is suggesting that. The reason why I'm saying that we can face a bounce from this zone here is simply for the fact that the RSI signal pivoted towards the downside is suggesting a support to the SMA 14, but not only that support is located, it's gonna be located within the gravitational zone of the bull strength percentile. So this is why I'm saying that we could face a bit of a downside here, find a support from the SMA 14 and that gravitational zone, then we get a continuation onto the upside, right? So this is looking still very bullish. In fact, if we're going to get a pretty nice discount, this would be an incredible area to load in some calls, right? So, or to get long this asset, particularly betting the upside, right? So now let me actually see if we have some of that weakness coming in on the very short-term time frame, right? So yeah, the bi-hourly into the 4-hour, this is suggesting a very limited downside. We have downsides all the way up to the 12-hour and then consolidation on the daily. Yeah, so I'm gonna favor this downside here, you guys. I say that if we can. Okay, that we have enough time. So a day and 4 hours before we close this candle. Okay, the reason why I'm saying that we have time is because if we close this current bi-daily candle anywhere below the opening range of the previous 2-day candle, which is 259 or 258.93, closing that bi-daily candle beneath that 258.93 would suggest that we're printing bearish engulfing on the bi-daily time frame, and that's not a good thing. Okay, but we have enough time to be able to come back, touch down in our area of support before a continuation onto the upside. Okay, so now I wanna warn here that we do have one more less conservative target to look at, right? So that would be in respects to this range here, 250, 259 to 257.23, and that could be also an area of support before a continuation onto the upside. Keep an eye on that. I'm very much still bullish this asset, and I still think that this can continue to the upside. And to be very clear with you, I can see, let's see, the resistance coming up. There is a range between 297 and about 313.60, and that could be in the next week. So yeah, I definitely am still bullish, ticker symbol TSLA. Okay, you guys. So yeah, let me go ahead and now move on to the next one, right? So let's see what else people are saying. Hedge fund killers, what's up? Saying what's going on, my brother. Hope all is well with you and the family. Everything is good here, my friend. Thank you so much for asking. I appreciate you so much, and I love that you came by and joined and reacted here to the community, right? So guys, let's go ahead and take a look at the next ticker here. It's going to be for Destiny, TBLT. Let's see what it's got going, right? So what are you looking on this, Destiny? Is there some type of a fundamental catalyst coming out, or has it already, right? Oh, huge gap down. News too. Let's see. 40 minutes ago or 2 hours ago, let's see. Tough Built Industries announcing pricing of 4.5 on public offering. Whoa, okay. Oh my goodness, could this really be it? Team, hold on just a sec. Let me just reposition my mic here. It's kind of falling off. Literally just a sec. There we go. Man, I thought that I was going to lose the freaking mic here. All right, so good. The stand is good. No problem, guys. So TBLT facing this huge downside here on that new evaluation. So the market didn't like exactly what they saw here. So the daily time frame now presents a huge gap. The danger here, guys, is when these things gap down, you flash literally every momentum average that you have. So then it becomes hard to track. Right, so even if you look back, historically speaking, now you're at literal price discovery and lows. I don't know where we can go, but if we're looking at now, let's see, 4-hour time frame, let's see how long we've been down there, right? So, man, look at that. That is crazy price action. In fact, it doesn't look like it's, maybe. Let's see the historical lows on the stochastic momentum. On the 4-hour, right? So there still could be a little bit lower to go, actually. So we're currently sitting at about 2.2%. And historically speaking, we can face about, we can zero this out. We can drop to zero on stochastic momentum. So that's kind of indicative of a potential downside even still. And here it is. We're starting to get that red. To pretend to tell you where I know it's going to stop, that would be me lying. So the only thing I can do is potentially use geometrics to give you an idea. But since we are in price discovery here, that poses a huge challenge, right? So the way you would do that is take an inverse fib from the prior candle, right? We just started the new one, the new 4-hour candle, which is 3 hours and 47 minutes, right? So guys, hang on just a sec. Let me go ahead and say goodbye to my wife. She is now going to work. Just a moment. Thank you, team. Thank you so much for sticking around here. Let's. I'm sorry. So I was going to tell you to just look at your inverse fib here. And this is a way that you can determine where that price target can essentially lead to, right? So in this case here, if the price action continues to the downside, we have the 2 fib located right at about 25.25, and if it doesn't support there, then the 272 would be the most probably the higher likelihood, right? Around 20.75. So, but again, this is not backed by any historical price action. It's only backed by one 4-hour iteration candle with a fib, inversely, right? So you have to take this with a heavy grain of salt, a big grain of salt. All right. So anyway, let's go ahead and come back to the chat and see what's going down, right? So let's see. I'm still in at 18. Okay. Snowdrifter saying edit 4 ladders down on the 4-hour. Okay, so ticker symbol EDIT. Let's look at it. So EDIT, and you're talking about the 4-hour time frame. So we're already there, right? So yeah, this looks like 2, 3, and this is already the 4th one right here. That let's see where the momentum is currently sitting at, right? So, and also let's see what the moving averages are doing too. Let's see. Okay. A good indication is that we have declining price with declining volume, but the volume for the bears is still above the moving average. So that's still kind of indicative of bear control. We're slowing down the downside too, right? So as you can see here on the MACD, it's kind of losing that bear pressure a little bit, but we could still see a little bit of further down. So if I'm going to be honest here, I think we could face we could face maybe one more ladder. So it could be the 5th one that this is suggesting, and I would say a support touch at 755. If not 755, then 732 to 741, right around there. So I'm just gonna draw a whole range here because the likelihood of finding a bounce from this zone is very high, right? So just like this here. Okay, so 755 to 732 could be the overall support for the last ladder. Okay, so keep an eye on that, as there could be a pretty substantial bounce from that zone there. Okay, so now if we're looking at an upward time frame, let's see if we have, a shorter time frame, maybe the 30-minute even. Let's see if we have anything down there as, nothing. Nothing at all. Let me now move on to the 4-hour and put in the reversion variant. And I guess reversion is suggesting a bottom side here of the clouds. I would definitely suggest anywhere within this target here to get long the market, right? So let me see something else, right? I can pull up the Gaussian channel in the 8-hour time frame to see if we're facing, nothing there. All right, so the daily time frame finding that support. So what is? That's where it is. All right, so we could still wick down, man. This is perfectly finding that fourth bottom like you're talking about. I mean, dead on the money here on the bi-daily Gaussian channel. If we're able to face a little bit further of a downside, I think that we could just wick down into this area here, and then we could explode from there, right? But it's still a little weak here. So if we're getting weakness, either we test that same low at 771, or we can wick down to this area here, right? Remember those targets for your future evaluations, right? So now Berenson saying ETAO rubbing against resistance could move. Are you talking about the daily time frame, or what time frame are we speaking of, right? So ETAO, let's see it. So NASDAQ ticker here, you guys, and let's see on the daily time frame. Okay, yeah, we're at a critical resistance, and the resistance is a range of which it has already tested, right? So Bad Art saying any nice up curling tickers right now. That we've spoken of a few thus far, and I think this could be another one here after a pullback, though. Let me see the 12-hour time frame. I'm sorry, I didn't mark off the resistance I spoke of, right? I'm literally just looking at it, and that's it. This is the resistance range, right? So just like actually I would favor this the bottom side of this range here. just about like this, right? So that would be 70.22, and this is what I'm saying, that we're in the process of finding that resistance right now, right? So this is that zone here. Another good thing is that within the 12-hour Gaussian channel, we're now officially inside of the Gaussian channel. So when we do that, oftentimes we come back and test the bottom side of it. So if we were to reaccumulate, I would then put a secondary target down here at about 63.03 for a potential long opportunity, right? So that's that could happen, as we do have some exhausting bulls right now. Yeah, the bulls are getting exhausted right now. 12-hour time frame is kind of overextended. It looks like it's trying to correct to the upside, as we do have the RSI within the bullish control zone. So let's see if the shorter time frames are pushing that narrative to the upside. In fact, they sort of are, but they also are looking a little. Okay, 6-hour time frame upside, 8-hour time frame upside, 12-hour time. Okay, yeah, they're starting the cascade right now. Okay, you guys. So if we're speaking of the 30-minute time frame, we do have a little bit of a downside suggestion here, and that's where I think the opportunity along the market, maybe down here at around 63.03, could be present. EMA 21 located there too. All right, so now the top side, of course, you would have to look at the current upside, the current top side target of about 69.88, somewhere around 70 cents, right? So if you were to measure entry from that 63.03 to that top side of that candle there, you're looking at already a very nice scalp of almost 11% on the day, right? So that could be a pretty nice long opportunity there. Of course, we're talking about paper trading, right, you guys? We want to make sure that we can keep the retail safe and sound, right? So let's go ahead and now move on to the next ticker here. I do see high potential here for ETAO, particularly for the short-term time frame, for a nice 11% gainer. And to be very honest with you, I do see a continuation to the upside, but that's very conditional upon closing. I say a minimum 4-hour candle upside of 70 cents. So as soon as we start getting those 4-hour closures above into this zone here, then that would mark off a very important area of support before a continuation onto the upside to test, I'd say to test the space between 76 and about 79.40. Okay, so I can also draw that in just in case. So, 76 is what we talked about, right? So 76, right there, 76.18. Let me see if I can tighten this target up. Okay, let's see. I need to get these averages out of the way. Let's see. Sorry, guys. Hold on just a sec. Yeah, I would say about, as tight as I can be, maybe 78, 72 is a strong area of resistance, right? So, and that's a huge upside from here, right? So, obviously there's other targets that we need to keep in mind, like short-term time frame, guys. It's hard to see this, so let me just put it on the 4-hour so I can give you a more direct answer, right? Because yes, we do have a topside resistance there, I get it, but we also have one more, and that's located right down here between this space right here. So this would be the second zone for take profits, right? And depending on what type of position you're getting long, right? So, and this is indicative of finding resistance at 72.32 to 74.71. These are the zones that I'm looking at to combat for the shorter term time frame period. Okay, so keep your eyes on that price action and see what it has to say, right? So anyway, let's go ahead and move on. Rocket Law, good morning to you. Happy to see you here. Let's go. Yeah. You know what? Yes, Degenerate Ape bringing up ticker symbol SOUN. Very good. Let's go ahead and take a look at it. We put out a video yesterday. I don't remember exactly what I was saying, right? So, yeah. So, man, it actually surpassed one of my. It surpassed both of the entries here. So let's see if we are in invalidation. Are we in that zone yet or not? Okay, actually we're not. The invalidation zone would actually land between 337 and about 339. So closing a daily candle beneath this zone here, which would be the inside of this, the inside of the triangle, then yeah, that would present a pretty bearish outlook here. But we could be at a relevant support right now. Okay, so if they're also, guys, if we're gonna face a continuation to the downside here, then let's see if the 12-hour has it. Ooh. Okay, take a look at this. Okay, look at your RSI on the 12-hour time frame. You see how we're right at the support of the SMA 14. That support could be very much in line with the EMA 7, right? So right down here. So that could be the support that we're looking at presently on the 12-hour. But if you look on the daily, there is still slightly more room to go to the downside. Okay, so if that's the room that we're talking about, and if the 12-hour doesn't essentially react to the support right now as we speak, it's already reacting pretty nicely, right? But if it doesn't react to the point to where it pivots the 12-hour RSI to the upside, then the daily time frame would essentially take over and encourage the price to fall into our first zone, which is right in here, right? So just like this, that EMA 7 is located right at the support that we were talking about from the resistance of the prior breakout, right? So, if the 12-hour time frame, I'm saying conditionally, if the 12-hour time frame does not react from that moment, then the price action can have a bigger opportunity to find support at 342 to 347 before a bounce to the upside, right? So, everything is looking pretty healthy. It's still on an upward trajectory overall. And also, it has met only one of our upside targets from the triangle, from the ascending triangle, right? So, the second targets would be located between the range of 418 and 429 at the 1.618. And the third target would be in respects to the 2.618 golden mean at 494. Okay, so upon these breakouts, guys, oftentimes we have to come back and validate as we break current resistances, we come back and validate them as new supports as well. So this is why price action can't just move to the upside, is because we're breaking resistances as we go, and we have to always come back to validate them to see if they're a good viable support. And then when we do verify that it is a good support, price action then continues to the upside. And it literally is a group effort, right? You have to know how to identify the play and then be reactive to the play, right? So meaning either long or short. In this case, I can see here that there is a potential floor being found. I would honestly enter only a small position, probably 25% of my allowable trading portfolio regarding this particular trade for this ticker. And then as we start dropping in the price action here, then I would start getting a little more aggressive into the zones that I personally believed to reach, right? So oftentimes if you want a guarantee position, yeah, you would scale down, but then you can argue is that why don't we just go in down here? Well, yeah, why don't you, right? So that would be particular to your decision and your style, which would be okay, all right? So now remember that this downside, this bottom side target that I'm looking at here is very much in line with the 0.618 golden mean at 342, bottom side of the range, right? So that's another reason why I'm saying that. This 342 has high confluence with the EMA 7 too. So geometrically speaking and psychologically, that could be a zone for a bounce. Okay, you guys keep your eyes on those targets there, and I think we can be okay. All right. So now let's go ahead and continue looking here. So the War Ghost saying, does ticker Z look bullish for a breakout? Want to see if my charting skills are improving at all? Okay. Yeah, man, not a problem. Let's go ahead and take a look at that ticker symbol Z. Right. Let's see what it's got for us. Right. So that's going to be Zillow. So 47.89. This is an ascending triangle. This is actually bullish. Okay, so let's see. I hope you're saying, my man, the myth, the legend. I'm still alive, so thank goodness. Okay, so guys, I think that we're at the resistance as we speak. And I'm talking about a very specific resistance here. That's literally the top. I can't say that this is the top side of the triangle because we have mismatch like crazy on the trend lines, right? So I think I'm gonna favor. I hate it when this happens. I think I'm gonna favor this one here, or maybe even. Actually, let me see the red one, or this. Yeah, the top side of the red. Is it sort of Oh man, it's sort of matching. It's particular to the opening of this. Okay, it's on an opening basis. Wow. Okay, a closing basis. Sorry. So closing basis of the daily here, we can actually make that trend line just like this, and then we have our regression right up here, right? So this is essentially what I'm looking at, and we're right at the apex too. Okay, so let me adjust this just ever so slightly. So let's see. Cryptic Trader saying, what up, Arca? Had a great AM. Caught NVDA short at 434. Got 10. Dude, what? Really? Damn. 10 points. You're talking about like whole moves here, not ticks, man. Those are points, boy. Very, very cool, man. Congratulations on that trade. Awesome gains for the day, right? So remember that today, man, it was just super bearish. Looking at the markets were just reacting so negatively to what the Fed was saying, right? At some point, we started covering, and I assume that was right in the area where you started covering your position, right? So I was speaking about it about an hour ago, saying that we likely found the low of day, and Nvidia looks like it's also at that floor right now. It's not bad. Yeah, Powell, of course, man. This guy always tanking the freaking markets, man. I have nightmares with the guy. So ticker symbol Z. Anyway, back to this, guys. Okay, so this could be in the process of a very, very bullish breakout. Let me see what the averages are saying. Okay, daily moving averages are all kind of pivoted towards the upside, so that's very good. We already have the silver cross happening on the daily here, and we're literally using it as a guide towards the upside. Now, the next time frame, or the next moving average to get to crossover is going to be on the daily, but that's honestly probably from the 6 hour for the golden cross, right? So yeah, let's see. We're still a ways away from crossing that 50-day moving average. This one right over here. We're converging. We're converging, right? Starting on the bi-hourly. So yeah, it would be first to find a cross to the upside on the bi-hourly, and then that would cascade into the 4 hour, 6 hour. When we get to the daily crossover of the golden cross, that's when it's really gonna make a difference, right? So there are a few targets to look at here, okay? So let me pull up the 12-hour chart one more time and see what we have, right? So if I'm talking about upside targets, hold on. I think, yeah, I'm still questioning the freaking trend line. Okay, I think it's being traded on the 12-hour instead. I'm going to correct the trend line. We have two very, very confluent touch points there, and this actually gives it a better idea since we're approaching the apex of the triangle, right? So oftentimes we want to see a breakout at around 65 to 70%. This is already 80, 85. All right, so it's not to say that we can't break out, but this is the resistance right now, 48.96. Let's see. Hey, Arca, find any smaller plays that are good today? Dude, man, I don't even remember the ones that we talked about. Yeah, but yes, I think, yeah, we need to look at, we'll look at RCRT, Sebastian. We'll definitely do that. I never got to see HSDT either, right? So we need to look at that one too. Man, there are a few tickers. I think it was ticker symbol EDIT from Snowdrifter. That has a little bit more low to go. And then that could start finding a pretty nice bounce to the upside. Oh, yeah, ETAO. ETAO was one that I think Berenson pulled up. And that is something that I'm looking at as a potential opportunity for sure. So, and then from there, I don't remember seeing too many others, but... Oh, yeah, NVOS has the potential for an upside after a support touch coming in. But, yeah, man, I say NVOS and ETAO are looking pretty promising. So, and also, I wouldn't actually trade this, but also CLNV, right? But trading CLNV is just, man, it's a headache because it's so psychologically impaired. Yeah, not a problem, my brother, of course. So guys, here we're finding that resistance, right? And now the more important thing is that we're finding the support as well from the EMA 7 on the 12-hour time frame. That's yeah, seriously, man, it does. So we're seriously getting that. We're getting that support touch from that EMA 7. There could be the floor already found in the 12-hour time frame. As we can see here, we're increasing volatility and getting an upside pivot on the EMA 3 and SMA 14 of the stochastic momentum. Okay, so that's very good. That means that our long target could have already been succeeded at 47.51. Price action currently is at 48.01. Okay, so now, if we're going to face a downside to try to gain entry late, so that means that we have to wait for some type of resistance. A lot of the times, the conservative trader will wait for the topside resistance, pull back to the current highs / the current lows, and then we could gain entry for a potential breakout, right? So that would be a breakout trader, okay? Meaning that you would bet before the breakout to get a potential move that can, let's see. How far can we take this? Yeah, potential, let's see, 4.618% move to the upside, probably a 4.5% before a retracement to validate this as a newly converted resistance into support, right? So the breakout trader will trade that 4.5%. You would, liquidate position here and re-enter at around 48.91 upon validations, right? And then you would actually take this to the upside targets, of which there are 3 to go over, right? So let's get rid of the moving averages here and go over those 3 targets real fast. Please remember, you guys, that this is per the trading book rules. I'm talking about traditional market trading rules, right? You're looking at the top side of the triangle all the way to the bottom side of this triangle. This is your range number 1, okay, or your bull set number 1 target. The second area would be the center of the triangle, right, top side of the formation itself, all the way to the bottom side of the formation, and this gives you target number 2. And then target number 3 could be, let's just say that we were to break out in the following days. So let's say that it were maybe Thursday or something, right? We'll take a trend line from that area there to the lowest point too. So now we have 3 price objectives. This is how we look at them, right? This is how we evaluate them. Of course, the shorter term time frame, this would be a lesser likelihood, of course, right? The secondary target here, you would place right upside of that trend line because this is, it's a perfectly horizontal line. And this would suggest a top side of about 56.76, okay, or 56.69. And then the third target would be the higher likelihood one to face in the shorter time frame, right? So that would be indicative of, let's see, 51.62. It is pretty relevant, okay? So I'm going to mark off the areas that I do to kind of conserve time here. I'm going to mark off the areas to the resistance levels that I'm looking at, right? So this particular low here, right, that gives us our range number 1, okay? So just like this. Now the range number 2 is actually down. It's actually to the downside, okay? So what I mean by the downside is because you have this wick down here, okay? And also, if you're looking at the target based on this top side of the target here, you're also looking at the potential of overextension since we have a top side of the wick up here, right? So I would naturally favor the top side of the price objective to the lower bound of that, to the upper bound of this wick here. Okay, so this is range number 2 resistance. So now your range number 3 resistance, let's see how we can determine that, right? So we are currently sitting at about 62.50 for that resistance range, and I see it. Okay, so I would favor the price action to reach, man, what the heck happened here? To reach this low of this wick here. The low of that wick, and that would be a very, very tight range. Of course, we can actually correct this upon adding fibs to this, right? So these are the 3 targets that I'm essentially looking for ticker symbol Z to reach, and if we can back this, then let's start looking at the 4-hour time frame, right? So 4-hour time frame is already getting a pretty nice pivot to the upside, but it's corrective. So that means that the 6 and 8 hour are already facing that upside, right? So 6-hour upside, 8-hour upside too. Okay, so if we are going to face that move, it's likely to realize within the next few days. I think we need about 3 or 4 days to get this without FOMO, of course. So if we do get, 3 to 4 days for the shorter time frame targets. I'm talking about this and potentially the lower end of this 55.14. I would say about 2 weeks to try to reach this top side of the target right here, 62.50. To around the top side of about, what do we say, 63.13, right? So I see it as possible, right? But I do think that this is going to be a longer term swing play. But if you know that the trend is currently moving towards the upside, then this would be a good zone for you to kind of like, long the market, right? Take profit. And then you wait for a relevant support. Long the market again, take profit, right? Then you would wait for another support. Long the mark, take along the top side, and then again, right? So since you know that you're going in an upward trend, you don't have to hold all the way, right? You can play the short-term volatility plays and then, execute accordingly. So that oftentimes, guys, helps. It helps greatly, okay? So knowing where your targets can be. And this is, that being said, we haven't even validated this with any type of with any type of geometric, right? So if we're looking at the current range of geometrics, then we can see a high confluence here. Okay, you guys. First of all, the knot 618 landing at 51.32. We're talking about the bottom side of 51.59. Okay, geometrically supported, and now we're looking at here the bottom side of this support landing at 55.14. We're looking at 55.32 at the 2.618. Another golden mean, and yeah. So now, and again over here, take a look at this. Our discretionary target of 63.12 just happens to be very near to the 4.618 golden mean at 63.32. Literally, all the 618s are matching here. Okay, so that's it's very good. And also notice here the current price action came back down to the area of about this candle here, right? So you're looking at this bottom side. What we were looking at is a potential long entry, 47.47. And look at where the knot 618 is located, 47.32. We're following geometrics very tightly here. Okay, you guys, so if you're starting to get all the rhymes around the 618s, the probabilities start becoming a little higher, right? Another thing to notice here, 12-hour time frame, bullish volume above that moving average, right? So that's also another reason why institutional and retail whales can do day trading within this, right? So when they do start day trading, it pressures the price action to the upside and downside, thus increasing more volatility and more opportunity for both parties, right? So you want to get enough short sellers and enough long biased traders so that you can really gain some serious upside here, as it is going to be presented. In my opinion, it could be presented soon, right? So yeah, that's going to do it for ticker symbol Z. I hope that helped out, my friend. And let's go ahead and take a look at RCRT, right? So yeah, this is one that moderator Sebastian Lim just asked for, right? So RCRT, let's see what it's still sitting within that support, right? Still sitting in the area of the triangle that we were looking at, right? So this is actually we were looking at it, I think, on the 4-hour time frame, maybe. Yeah. So yeah, this is the descending triangle, or the right angle triangle that we were looking from days and days ago here. And we're still within that support, right? So now we have 1, 2. This is potentially the third touch of the support level, which honestly, from this third touch, we don't need a fourth one. The fourth iteration would land on the top side. So meaning resistance touch 1, 2, 3. This was already 4, right? We're getting the third touch, which is honestly the last one, and then the true breakout test number 5. Okay, so that's usually how it plays out. So it's playing out pretty according to the trading book rules, right? So I mean, I know that the 4-hour time frame still has a downside to look at here, but if you look at stochastics and volatility, we're kind of flatlined here, right? So meaning that there are not many shares traded. This is usually around the times when stocks tend to rip to the upside when no one's looking, right? So at this point, very low volatility here, very low shares being traded, and at a critical support. So that would sometimes explode a ticker to the upside, creating a FOMO event, which would then kind of bring in the not so experienced retail, providing that liquidity for an up run here, and then the institutional and or the traders who are educated, that would provide the liquidity for them, right? So I think that this is still moving according to plan here. We have to validate the support still. We have to get that upside to resist around 2704. And then very likely a retracement to around 2580 before a breakout to the upside. First target to look at, I would say resistance right at 3175 before a pullback. Validation of resistance into support before a continuation. All right, so keep an eye on RCRT. This is a very, I would say, man, this is a sweet spot for this ticker if it would introduce a very nice upside. So overall targets for this, though, you guys, these are very high targets that I'm looking at, upwards of 44 cents if we do get that volume, or if we do get that buy side interest, right? So keep an eye on it. I think it's looking pretty primed. Okay, you guys. So anyway, let's go ahead and come back to the chat and see what's going down. Okay, so I know that we got that. Okay, perfect. And this is where I started talking to Cryptic. Very cool. And Hopium said that Powell is the market wrecker extraordinaire. Couldn't live without the guy, man. So yeah, ETAO is looking good, you guys. And now let's see, Joey Bryson talking about APLD looking good. Let's see what's up, man. Let's see what's going down. So APLD, let's see. All right, so, oh man. So this was actually that ticker that we were looking at from some time ago. It was building a bearish formation. And, so I was also talking about a potential, I think this was a bear trap, right? So as it is kind of showing as such even still, right? So let me get rid of that. Man, this is a lot of consolidation here. The 4 hour is already showing that upside pivot, and we're increasing volatility ever so slightly. Okay, so let's see the 6 hour momentum. Okay, upside on the 6 hour momentum. It's not as strong as we want it to be, but it's still there. 8 hour time frame momentum is starting to curl. Okay, so there is a move here, but it's kind of slow. Okay, so the average volume here is something I want to see, right? So, man, come on, can I get rid of this somehow or what? Oh goodness gracious! Let's see, guys. Sorry about that. Let me see if I can get my damn traditional tools back up. What happened? Yeah, my analytics. Where are they? Where are they? Where are they? There they are. Here we go. Okay, so we're looking at an average. Let's see the volume. Wow, 3.19 million on an average 10 days. Divided by 5 days. Okay, so it's not the slowest and it's not the fastest. It's okay. Right, and the market cap sitting at a very healthy 911 million with a float of a very tiny float of 53 million. Oh my goodness, man, this is insanity right here, you guys. Okay, so if we can face a support, then that would very likely have been earlier today at around 878, and it's currently pumping to the upside. Look at the 8 hour RSI, finding that support. Right, we got that breakout upside of the SMA 14. Then we validated the SMA 14 and continued on to the upside. We're approaching the gravitational zone here while we're pivoting towards the upside in volatility. In momentum. Okay, we're decreasing that bear pressure on the MACD as well. All right, so this is, and we have ADX support. 35% is very strong. Okay, so DMI support with all of this, you guys, that's likely to move on to the upside. Okay, so if this does get the interest from retail, then we can see a top side by tomorrow of, I would say, the more obvious target would be around 1050, right? So what would that percentage be from the current position? So, man, it didn't even click right here, right? So, yeah, you're looking at about an 11.5% move to the upside from the present price, right? But, yeah, if we were to have signaled this earlier, then you would have been looking at a 20%. So you're halfway up that range as we speak, right? So still this can present a pretty nice opportunity for a day trade. And in doing this move to the upside, that would flash all of momentum, then favoring the daily and bi-daily timeframes for an upside move, of which can be figured statistically, right? So another thing to notice here is that this is today actually oh no, right, it actually didn't break the market structure. It came very, very close to it. But we would be, anywhere upside of 1050. That's going to be price discovery. So that if we are able to close a minimum daily candle above $10.50, you guys, there's a lot of probability here. There's a lot of potential for upside targets beyond what we can even know, right? So that would be very cool. But it would be conditional. It's entirely conditional upon closing a daily candle above 1050. There is nothing to resist price upside of that. And we are literally 98% to that target. Okay, so keep an eye on that stuff. Okay, you guys keep a close eye on that, because this can present a pretty violent move to the upside. And I'm not sure if we can. These are going to be very volatile moves. I'm talking about wicks and wicks and wicks. Oftentimes, things like that can actually limit sell orders, okay? So be careful in there. All right, so let's see. Yeah, the Wargo saying, thank you for looking at ticker symbol Z. Not a problem, my brother. Very happy to help. So now UCAR is actually another one that people have been looking at too, right? So UCAR, let's go ahead and look at it, as this is moderator Sebastian Lim asking, right? So, oh man, look at that. It's already breaking a massive amount of market structure. 8 hour time frame has that huge upside. Man, that is very convincing. RSI way crossed above the SMA 14. Let's see what the 4 hour is looking like. Likely a pullback, right? Oh no, it's barely starting. Holy crap. All right. So UCAR is, yep. Sebastian Lim is absolutely right. This is potentially setting up for a continuation to the upside. And I would say upwards of 1185 into the target of the present high range of 1529. The power that I'm seeing here building up on ticker symbol UCAR is absolutely massive. And why in the hell is that happening? By the way, I don't even know what could be the freaking reason. We have nothing here. Jeez, man. Yeah. This is very likely going to continue to the upside. In fact, we should heavily consider putting this in, and ETAO, right? So this one is going to be the top one. We should probably put it together a play for the Discord later on. We'll add that there, and also ETAO could be another play that we can put up tonight, right? So we'll go ahead and take a look at both of these plays tonight. And as I do think that the high of day has already likely met, the high of day being 926. That's very likely we're going to close, right? So if price action does drop a little bit more here, then the long targets would actually start, I would say, at about 676. That's very aggressive. I know it's low, but let me see if I can get tighter. Yeah, I actually could. There is a secondary range. Okay, perfect. So this would be the first range to get long. 745 to 763. Right, that would be the first zone. The second zone would actually be in respects to this second wave down, right? So that would be 675 to about 691. It becomes a little harder to actually see that there, as this target would likely be the one to kind of look at, or the higher probability target, right? So I mean, the moving averages are about to favor this bottom side here, but that's not always the case. It's not always the case that where price action is gonna capitulate all the way to those levels there. Oftentimes we can get a wick there. That's all fine and dandy, right? But we have to look at every potential here, right? So remember, in my personal strategy is I know that there is a bottom to come in, but I'm not going to be the one to essentially bank all of my my portfolio entry on one entry. Oftentimes, yeah, you know what? Momentum traders do that, right? For scalp plays, that's no problem, right? But when I'm looking at potential longer term day trades, meaning a few hours play, for the upper term time frame candles, then I would probably look at different valuations, right? It's whatever's particular to your style. Okay, you guys just know that. And I mean, if we're looking at upper term time frame targets, then there is a higher likelihood to see this here, opposed to the shorter time frame, from this area right up here, right? So yeah, I'm looking at these two as the higher probability potentials of reaching price action for long entry, right? So, and now the top side target, of course, it would be upwards of 906, right at about that candle back there, right? This one here, to the top side of this present candle, right? So we'll go ahead and kind of note it down just like this. This would be the one of the more obvious resistances to look at, right? 903 to 919. Let's just say that you got long this ticker from the top side of the range here, right? So that presents a potential swing, and I would say actually a swing play here, right? As that would be a massive, to the bottom side, 18%. And if we do get that top side, then that would present a potential gainer of, 20.4% to the upside from this topside entry, right? So just keep that in mind. UCAR may be presenting a very nice opportunity here. Very likely we've seen the high of day already. Now we have to consolidate and come back, right? And it's typical that this is pulling back because look at the time, right? My time right now is 9:54 a.m. Pacific. So we're talking about 9:30 to 10:30 is when the algos change, right? So yeah, this is very likely why we're seeing that pullback, right? So anyway, I'm happy to have seen that ticker. Very, very exciting to put together a play for ticker symbol UCAR. Okay, you guys, and ETAO as well. So now Taryn saying volume and hype on Mullen is insane. Can we look at that if possible? Thanks, Arca. Yeah, not a problem, man. So I know we were speaking of Mullen just yesterday, right? But Mullen has this tendency to kind of rip to the upside and then capitulate on everyone, right? So the current 6-hour resistance that we're facing is very much like the resistance that we faced in the prior wave to the downside, okay? So I don't want you to get overly bullish on this situation here, as this is likely another liquidity trap. Okay, you can see the iterations happen here, right? We may get one more candle here to reach maybe even the top side of about 22.98, 23 cents, and then this thing could actually create a second and then even a third and then even a fourth wave to the downside, okay? Keep your eyes on that, because oftentimes that presents liquidity traps, okay? You don't want to be the subject of a liquidity trap here. All right, you guys. Anyway, let's go ahead and continue on the analysis. Mullen is just one of those, man. It's just it's very tricky, you guys. There's a lot of psychological impairment with it. Lots of sentiment behind that ticker. I would suggest trading something else, okay, you guys, because I don't see Mullen as a long hold here, right? I'm not sure what they have fundamentally, but I know that I've heard a lot of negative fundamentals, right? So in this case, if you are going to trade the volatility, know for a fact that that volatility is based around psychological impairment, right? Meaning that there's a lot of bag holders in this, so which means that any pump to the upside can be rejected because they'll take any gains that they can just to get out of this ticker alive, right, you guys? So when you're facing things like that, you know, that's a struggling retail right there, man, and that sucks, right? So keep your eyes on your price action here. If you are in the green, never hesitate to take your profits out early, right? Because this is these are very dangerous. These are very dangerous tickers to trade, okay, you guys? So cryptic traders, just say no to Mullen. yeah, guys, it's hard to trade this one, okay, you guys? So Mullen is just so bad. Yeah, actually the way you're looking at it too, man. Is it so bad or is it very good if you start shorting out around 22.95, right? So if you get short 23 cents, you're looking at a potential drop to around 12 cents. That would be a huge short position gainer, right? But again, you guys, there's a huge fight against shorts with ticker symbol Mullen as well. So don't fight that trend, okay, you guys? There's going to be a lot of crap here, okay? And a lot of crap that can actually present some serious downside, right? Yes, this is the second time that he is asking me this. This is the ticker that I forgot earlier, HSDT. Let's go ahead and take a look at this right now, right? So anyway, hold on just a sec. I will get to that right now. So Michael Bailey saying, is ETAO likely to show gains from its current price today or across several days? I'm gonna put together the play. I'm really gonna look into it after this, right? So I'm gonna see exactly what it has, right? Because I said to the community that I would put together a play for ETAO and for UCAR, right? So this is when I deep dive, right? UCAR is presently 41.74% to the upside, and that is not where it's gonna stop. This thing definitely has room to go to 80 to 100+%, and trading that range could really present a nice opportunity, but. I'm just saying that ETAO, I'm not sure if it's going to be a swing play or if it's going to be, there's always ebb and flow to look at the very immediate short-term time frame. I'm talking micro time frames like 5 minute, 1 minute, 10 minute, 15 minute candles, right? Of course there is that, but the higher probability moves also land within the swing plays too. So we'll look into that, okay? FOXO is near the loading zone now. That was the zone that we were talking about earlier, right? So, damn it, man, I'm gonna have to put it up in there, and I'll look at it right after this. So, that was let me put the master layout here, and also suggest that ticker symbol FOXO, right? So put it right up here, FOXO, and let me look at this ticker HSDT right now, okay, you guys? So, it's looking like it's getting a very nice accumulation period here, and I do see it's a breakout play too. Okay, so let me get the moving averages out of the way so I can show you what I mean. Okay, this is essentially, let's see. Yeah, it's pretty much a right angle triangle breakout, right? So I think it's something along the lines of this. Let me show you. Right, this is the bottom side of the support, and this would be your triangle, right? So we have several areas of confluence. This would be it right here, right? So let me bring this back, right? And this is the fake out here. We got the breakout here, retest of the current, or this was actually the conversion of resistance into support, bounce to the upside. Now the targets are already met, okay? So meaning that this was the top side target here, and we apply it to the point of breakout, which was actually this candle right over here. And this is the resistance that we got, right? This is the candle that essentially met that resistance top, right? So price action has continued to the upside and then rejected. So what is next? That is the next thing to look at. So since we are following geometrics pretty nicely, and also this candle wick, let's see the high of it. That's 25.05 compared to this one here with a high of 25. That officially makes, these two candles officially make the break of market structure. Okay, so that's a very bullish thing to look at. Okay, so if we're breaking market structure, that means that we're going to start creating a series of higher highs and higher lows. Okay, so we don't always want to just jump in onto these opportunities because we want to validate them as well. Okay, so particularly to the daily time frame, RSI, we're looking like we're approaching a support in, I'm talking about soon. Okay, so let me see a moving average here. That support line, I'm going to say that we can touch the 1780 because there is a very short-term gap there. This gap right over here, right between these two candles. I mean, I know we have that one shooting star here. I get it. Or a hammer, inverted hammer. I get it, but we still have the gap between, it's an imbalance between these two candles here. So that area there would serve as a very strong area of support alongside the EMA 21 and the SMA 50. Okay, so yeah, highly likely we can bounce from this zone here and continue on to the upside. Okay, because that's essentially what the RSI has been doing. It has been finding the supports from the SMA 14. What's to say that it's going to fail at this time? Of course, there's no guarantees in the markets, right? But I see there is a higher probability of finding the support from that SMA 14 and continuing to the upside. The next target after that, I mean, it's going to be the same ones that we faced over the last 2 or 3 days. And it would be the resist. Actually, you know what? I'll give you a range. So the top side of the range would be 2281 to, of course, that wick high right up there to about 2476. So we're going to have to combat this zone first, right? So if we can get a break, I'm talking about a break of this area here, 2281, right? 2281 break. We can face a resistance from 2471, then convert the 2281 into a support, and then we would get the rejection from the SMA 200 on the daily at around 28 cents or 27 cents, right? So it's looking good. It is definitely looking good, okay? But I would not long this yet, and I would actually, as you know, these targets up here, I would have already covered at about 2081, even though this continued to about 2476. My take profit would have already been taken, and I would have already been looking for the pullback, and I think that pullback is indicative of finding support at 1777. Okay, so I hope that helps, my friend. I hope it really does. Okay, so let's go ahead and take a look at the chat here and see what's up. What's up, Flame? Good to see you here. Is it time to jump out of rain or what, man? What is going on with rain? I remember yesterday we were looking at that ticker, and we did see a higher probability to the upside, right? I'm not. I cover a lot of tickers. Damn it! That was the wrong one. I know I cover a lot of tickers every single day, so it's sometimes it gets a little confusing here. Look at that, man. Look at that. What do you mean? Is it time? It's literally at the resistance that we talked about. Is it or is it not? Actually, let me see. No, man. This is not time to get out yet, brother. I think that there's still upside to go. And I think that you can actually take this to maybe 137 to about 139. I think that can go there. Are you? Oh, you're in the green. Oh, yeah, not a problem, Grotto. Got you. Yeah, man. So I actually think that this is. Let me see the 4-hour time frame momentum. It's starting to pivot towards the upside. It's gonna recycle again. Okay, let me see the hourly. Just a little jump. Yeah, so the 30-minute, see this upside pivot? That's great. And increasing volatility as well, okay? That's what we want to see. Yeah, not a problem, brother. We got a few tickers to look at still, but we'll definitely get to that, okay? Support found at the in the 30-minute, right here at the EMA 21, right? So we have that very nice upside pivot here, very, very explosive in the bullish control zone. Likely starting to affect the hourly, right? So now we want to get this to bleed into the bi-hourly and the 4-hour. So the bi-hourly is starting to react to it, and you can also see the 4-hour starting to show some indications of it. So To be very honest here, entry was about 5 minutes ago or 10 minutes ago. Okay, so, and in fact, if you want to see another potential entry, then we may face a resistance from here right now. And that resistance is potentially going to take you back maybe 1 cent. And I mean, the best case scenario is to take you back to the SMA 200 on the 5 minute to 132, but you're looking at potential entries now, right? So as this can lead to an upside here, but remember that the upsides are conditional upon getting the 4 hour to favor that upside first. Okay, so yeah, I would really want the bi-hourly to start affecting the 4 hour. So this is looking good, man. I still think that there is a higher probability here to reach 139. Okay, so I would look at some targets within that, right? So this is the opening value of this 4 hour is 130, and the closing of this one is, let's see, 130. Okay, all right, never mind. 4 hour support on the RSI is suggesting an upside. That's good. That's good. Yeah, the 4 hour is going to start getting impacted soon. It's going to start reacting. Keep an eye on that. It's looking not bad. All right. So anyway, let's go ahead and take a look at let's see. So yeah, Michael Bailey. Remember, I'm going to put together a thing on ETAO tonight on the Discord. So keep an eye on that. Okay. Let's see. And you said that the FOXO, Sebastian, was in that loading zone. Yep. This is literally what we were just talking about, right? Potential retracement back to 36.38. I'm sure that it may have actually reached it within the last, actually, let me see. Yeah, it did. Damn it. Damn it. It actually reached it 5, 10, 15, 20, 25, 30 minutes ago. It actually reached the target that we talked about. So 36.38, it got that touch right down there, and it actually bounced to the upside pretty nicely, right? These are how those opportunities come in, right? We were talking about 38.38 entry. 5 minute entry came right down to that target there, and then we actually moved to the upside. Let's see. So that's from right here on this target, right? That could have potentially been, what's the high of this? 39, right? So 39 right there. That was a 7.19% scalp just on the entry that we were talking about right now, right? So very good. So yeah, in respects to the price action, I'm still waiting for the secondary area. Remember, I'm talking about a zone of between 34.80 and 36.38. This could be the bottom side of that that long entry, right? So yeah, I'm still sticking to it. I think it has a high probability for finding a bounce within that zone, right? We also don't want to fail this zone either, right? The bottom side of 34.80. We don't want to fail that, because then we would be introduced into literally 34 cents flat. And that doesn't look like it's too strong. Actually, maybe that's actually not bad. You know what? I'm going to suggest it too, because of all this, right? Look at this candle back here. Right, look at this one right up here. Perfect resistance there. Also another resistance touch here. High confluence within this area here. Yeah, guys, I'm gonna modify my targets one more time. So yeah, this would be the third scale, about 34.01. Price action is leading towards that downside. There's gonna be an immediate upside. Don't get faked out on that, right? We're gonna touch that. We're gonna touch that EMA 9. Or the EMA 7 down here at 35.84, that's going to give us the validation of resistance at 36.38. That would be the reason why the price would capitulate and continue to the downside into the second target that we're looking at about 34.80. Right? So when we reach 34.80, that's when all of the indicators would be essentially flashed to the downside, and then we could look into the bottom side targets, right? So bi-hourly time frame is kind of indicative of these targets here. Look at this. You're looking at a support of the SMA 14 located way down here. I think so, guys. I think, right? So, and then also just know that there is kind of a medium here with the SMA 200 on the bi-hourly and the SMA 100, right? So looking at 34.35 could also be a good area right in between the target. All right. So anyway, let's see what the chat is saying, right? So Sebastian Lim is saying that's because the CEO of Mullen is selling shares. Oh, right. I definitely heard of that. Man. Okay, so NGL. What's up, FM? How you doing? Let's go ahead and look at that, right? So that's ticker symbol NGL. NGL, what are you doing? Let's see. Did I actually? Yeah, NYSE ticker. Bi-hourly time frame is still showing downside. Let's see the hourly. Okay, this was critical volatility. Okay, let me see the 30-minute volatility, critical and expanding. We need okay. So this could very well be the area of loading before a continuation to the upside. I was curious to see how this was moving, if it had an overall upside. This area here is the chop zone before continuing. So late to the party. What's up, Lockup? Good to see you here, man. Good to see you. This could be that the loading zone right now, right? This is huge consolidation within this chop range. And actually we did get up to 3 tests of this bottom side of the 396, which is honestly, that would be the long opportunity there. We are about to face a little bit of a resistance at the EMA 21 and the 30. Price action can lead back down to around 399 from this resistance here. I would say about 399. And I'm not sure that I can go any lower from there. Of course, anything can happen in the markets, right? But I'm seeing this as just reaccumulation before a continuation to the upside. This is looking pretty good. Let me see the daily. This is that target that I'm talking about around 396, 397, that's literally the top side of this range here. Okay, I don't think that this can go down any further than that. But you should take note that there is an invalidation zone, and that's at 357. So closing a daily candle beneath 356, actually, that would introduce price action to a very significant downside. Okay, so this is at a loading zone right now, and I would say the bottom side of the loading zone would be 395, and it's already kind of getting a tweezer bottom here. Usually getting these long wicks to the, in the downside, that represents bulls heavy interest, right? So this is looking good. I don't like that the volume is declining though actually it is declining. Perfect. Okay, no, everything's good. Everything is looking good. This thing could potentially continue on to the upside, and if there are any further targets to look at, then the obvious targets would be at 425 top. We have to combat that, right? We have to combat that first. And the range would be 425 to 440 in respects to this top side of the candle here. Okay, so just look at your historical price action, and that's how you're able to tell your relevant areas of resistance, right? So this could be a very nice kind of take profit for a short-term gain, right? So you're looking at, say that you were along the market at 403 and you waited for that top side. It's already about a 9% gain to that upside. That's a very nice day's play. $4.25, not bad whatsoever. In fact, when you have a range that's very close to the resistance that you're looking at, oftentimes a wick can be touched to that top side. If we did present a limit sell at that wick top, you're looking at almost an 11% play. Okay, and that's not the end of what I'm seeing here, by the way. Okay, if you are curious, I am still looking at a continuation to the upside, but the thing is that we're highly likely gonna face a resistance soon where we need to reaccumulate for real. Okay, so while I do see an upside move in the shorter time frame to around this zone of about 426 to 439, I also am expecting a pretty nice pullback. All right, and I'm talking about pulling back around the areas of about 354 to, which is the top side of this wick here, right, from April 3rd, right there to the bottom side of this range here. So that would be the secondary area to look at. So this has a little bit of, this is very particular to a trader who is experienced. Okay, so meaning that there is a very small amount of upside to go where you can capitalize from that, but know that there is a strong likelihood of pulling back very aggressively from that upside. Okay, so as there are validations that need to happen within this area here. Okay, and you can see that this area has been used as a chop zone. So we're very likely going to chop around here first before we can continue. Okay, so it's very important here that you know and that you are absolutely aware of you reaching a supply zone. Okay, this is the supply. This is usually not the area to enter. Okay, this is the area to short. Okay, so keep an eye on that. All right, so this is it for ticker symbol NGL. I hope you're still here, my brother. I'm sorry that it took kind of a bit of time for me to reach, right? But it's all good. We still got it. and all good there, right? So let's go ahead and see you. Safe Pop Culture, how you doing? Good to see you here. Ticker symbol FGR if possible. Love the stream. Thank you, Arca. Not a problem, my brother. Of course. Let's look at FNGR. Moderator Sebastian was talking about dropping a volume here from this asset, right? So let's go ahead and take a look at what the probabilities are looking like, right? So how's it hanging? What's up, Mark Roach? Good to see you here, my brother. Slightly to the left, right? A little comfortable. All good. So let's see, you guys. So remember this, right? We were talking about this range here. High probability of touching the resistance of the channel. We got that, right? We got also the support touch that we were looking for right back down here. That's also nice, but are we still in the process of a continuation to the upside? That's the massive question here. So let's go ahead and take a look at, FM, not a problem, man. Happy to help, my brother. Very happy to help. Okay, so let's just take a look at what's happening here. In fact, you guys, this is actually a bullish formation. The reason we're currently consolidating is because we're creating a continuation formation, right? We want to make sure that this upside that we've gotten is valid, right? So what you're looking at here is a symmetrical triangle, right? So just like this, and we're in the early stages of it, right? So this price action essentially converging like this would introduce a pretty powerful upside. Usually is a continuation formation, right? So meaning that if the price action is going upwards, then we form it, that's a continuation to the upside, but it can be played to both the downside and the upside. Okay, but it just so happens to have a slight left and low, and it just so happens to have a slight favor towards the bulls in this case. Okay, so that top side price objective is to take the price, take a trend line from the top side of the triangle to the bottom side of the triangle, apply it to the area of supposed breakout, which is usually around the 65 to 70% to the apex of the triangle, which could be around here. And let's just say that were this Friday, right? So if we break out this Friday, we're looking at a touch of the mean from the channel that we were rising in, right? So that's very curious, $3.11, which just so happens to be the top side of this 4-hour gap. Right, so that's very interesting. So now, because it is the top side of that 4-hour gap, we have to take the entire gap into consideration now. Okay, so highly likely this can face resistance from the zone of about 297 to 311. Okay, the volatility is getting low. We're starting to move volume below the moving average right down here, right? That blue line. So as long as we are below the moving average, then the volatility is going to stay, or volume is going to stay slightly bearish, right? And bearish is actually the word to say, because take a look at this 4-hour Stokes facing towards the downside with decreasing volatility, very likely to find some resistance soon, likely between the zone of about 244 and about 239. We'll come back and validate the support down here at 211, which, by the way, is touching down at the 4.618, right where we had our range right here at 205 to 210. 210 marks the bottom side of this triangle. Lots of confluence here, guys. So this is still in play. I am seeing a continuation to the upside, but remember, if we do fail this triangle, then the downside is sorry about that. Actually, it's control. I was pressing the Windows button instead of the command button because I'm using Windows right now. So the bottom side target here would be indicative of testing this wave here, right? That low is around 161. So be careful with this, okay? But know for a fact that usually this formation, when built during an upside, favors ever so slightly the bulls, okay? So everything is looking good there, guys. So FNGR is still good. I like it, okay? So now, you know what? Hold on. Let me look at the broader markets. Okay, we're still finding that support from the SMA 10, 38.96 still on the TQQQ. All right, the good thing is that we're consolidating at support, guys. So this is looking very good for the broader markets too. Anyway, let's see. We just got some limited time here, right? But let's go ahead and look at some more tickers. What do we have? Joe H. Dude, Joe H., where the hell have you been, bro? Why did you disappear? My goodness, man. Everybody disappeared from me, man. I don't see Cal no more. I don't see nobody no more, my bro. Joe H., come back to the Discord. Say what's up, man. Very good to see you here, my brother. I'm very excited to see you here. All right, so anyway, let's go ahead and continue on the analysis here, you guys. So let's see what else we have. Right, so that's going to be it for ticker symbol FNGR. And now so BAT R, remember that FOXO was already near that entry, right? So let me actually pull it back up and see what we have. Okay, yeah. We totally got that entry that we were talking about, right? That's 3638. But please remember that this has two more entries that we're looking at, 3480 and 3401. Keep those in mind, okay? So Rocket Lock saying, I am here. Hell yes, my dude. Hell yes. SONN, what's up? Mark Roach, of course, we can look at it one more time. We've been keeping an eye on that as well throughout the stream. So, yeah. Now, not a problem, man. We'll look at that. So, let's see. Are we saying that rain will hit 139 today or in the near future? Let me go back to that. So, 139, I would say between tomorrow and what's tomorrow? What the hell's going on? There we go. So yeah, I would say Thursday and Friday, 139 could be the likelihood, and even actually into Friday, if we get that bullish trend, then yeah, 145 to 148. But that would initialize some short positions. Okay, so be careful there. Okay, because shorts can enter at about the top side of I would say anywhere between 147 to about 148. And that would be a very nice scalp for short positions to take price action down to this level. Let me show you. Okay, this would be in a short bias play. I would look for entry at 148 and start covering initials at about 6% down, and then take the price action to around a minus 8.2% gainer at 136, right? So yeah, there's some things to kind of look at between these targets here before continuing on to the upside for a more aggressive manner, right? But yeah, I think that there's a probability here that we can reach that top side tomorrow, maybe into Friday. Okay, so let's see. Yeah, let's go ahead and take a look at SONN. Okay, so I haven't seen COSM just yet, but remember that I was looking essentially for a pullback into the zone of about 297 to 301. And that marks a very, very important zone. Okay, you guys. So, yeah, SONN approaching. Guys, check this out. It's approaching the zone that we talked about yet again, right? So this is still the loading zone that I'm looking at. Mark Roach, I'm really looking at a potential. Wow, Mullen up and Tesla down. Tesla is just facing, we were talking about that. It's a short-term pullback. But I do see Tesla going up to about 312 or some 317 or something in the coming days. Maybe even into next week. So yeah, guys, take a look at this. We're actually approaching that target yet again. I'm looking at a potential long entry here of 5507 to 5748. And please keep in mind, guys, always remember that I'm going to continue pointing this out. Okay, so this is the invalidation zone, 5219. 4-hour candle closure below 5219, pardon me, is invalidation. Okay, that would mean that this upside is invalidated immediately, and we have to look at other potentials for a drop. Okay, potentially to 4202 upon failing that 5232 zone. Okay, keep that in mind. Okay, keep that target there. You don't want a 4-hour closure below that. 58. Look at this. We're pressuring down to We're pressuring down to this bottom side target that we have. Okay. That's still the same area that I'm looking for, okay, you guys? So keep that in mind. All right. So anyway. Bouncing. Okay, so COSM is actually bouncing. Gary Medill, good to see you here, my brother. Good afternoon to you. And let's see. Do you think? Right. So let's go back to it, right? Because I remember that there was. Let's see. Cosmos. Oh man. So we actually did reach the bottom side of. Let's see. That's a low of 303, right? So we had already talked about that potential bottom yesterday, right? So we got that absolute, I'm talking about, look at this, you guys. This couldn't have landed more perfect from the target that we were talking about, right? Look at this. Jeez. To the penny, right? Very good. All right, so that doesn't mean that I think that we're going to recover from here. I just think that this is a good bounce zone, okay? But still, in the event to where we actually reject price action, then you have to look at 297 to 301 as a pretty nice bottom side, right? So, price action looks like it's starting to want to recover to the upside, particularly to the 4-hour pivot on momentum and increasing volatility as well, or actually decreasing. Let me see. We're getting a slight increase, but still moving averages face to the downside. We want to get the pivots of volatility beyond the 15th percentile for a clean upside continuation. It's looking pretty good. It's not bad whatsoever. Okay, so now, yeah, let's go ahead and take a look at this. Let's see. Oh, SONN reached 58. Damn, nice. Let's see. Let's go back to it real quick. Oof, man. That's so close. 57.98 bottom already. And we are talking about a 57.48 potential, right? We already got one touch of that. And it made a very nice move to the upside based on that, right? So in fact, it actually was a very nice scalp, right? This move here, this was, guys, these are day trades, right? You look at your potential bounce zones. We already measured this one time, but that play led to a 23% gainer in the span of just today's price action, right? So you're looking at this entry from the morning, afternoon take profit, 23.5% to the upside, right? So then enough room there, you guys, for you to cover a 10, 13, 15% gain, right? So interesting that you're actually asking me about Rob Zombie. Interesting that you're asking me about Rivian, because I saw already 2 Rivian trucks in the highway. I was like, oh my goodness, that's there they are, right? So very, very cool. So what is it again? RVAN? Is that the ticker, or what was it? Was it RVAN or RV? I can just type in Rivian too. So RIVN. Yeah, I saw a Rivian truck yesterday. Their headlights are really weird. Yeah, they're super weird. I noticed that the car was entirely different. Really futuristic truck, right? So, I mean, it's, you know, they have to try to do their own thing. I get it. Let's see. So Rivian, what does it have in line for us? Well, first of all, let me look at this on the daily as okay, I see what's happening. Let me draw this in for you just like this. This is attempting to break out of a or did it try already? Hold on. Let me make sure that I'm reading this correctly. Or was it this top side? Sometimes, guys, it's just it's hard to read, right? So yeah, I see it. Okay, so it's an ascending triangle, just like this, and we have the regression line right over here, and we are right at the 60. I would say that's around 75 or 80% already. Support touch. This aggressive traders are coming into entry right now. Okay, literally right now. The entry number 1, 1439 to about 1450. We're at 1452, right? So that's literally entry number 1. And the second entry would be in respects to the bottom side of the formation at about 1419, right? So that's yeah. Cryptic Trader is saying that the neighbor has one is pretty ugly. It's such a weird truck, man. And I saw it. I'm like, wow, that's it, man. I saw it. I'm like, oh my goodness, it actually made it on the road. There's that thing, futuristic truck flying. So yeah, I would suggest a second entry. I'm not sure that I can reach it there, but it's still a higher probability. What we don't want, and it could actually introduce a downside here, but we're in the process of building a bearish engulfing on the daily. Okay, so careful with that. This candle formation right here usually signals a downside. Okay, when you're looking at the forward candle engulfing the previous green one, that usually marks off a pretty bearish formation, okay? And that can introduce, there's no price objective to it because there's nothing to measure within this. It's just a psychological a tool, right? So GTII actually green today. Oh my goodness, man. Finding that 70 cent that we talked about 2 months ago, man. Jeez, that's tough, bro. That sucks. That really does suck, but I'm happy that it is at least green today, right, man? Oh, man. Anyway, so yes, you guys, we don't want to, I mean, if we close it below the, man, it's kind of tough right now. I'm not going to lie. The opening valuation of this candle here is 1524, okay? So closing the freaking existing candle anywhere below that 1524 would mark off a freaking bullish and bearish engulfing, okay? So if that's the case, then price action may actually fail this triangle, creating a bull trap. Okay, so if there's, let me see what the moving averages are looking like. Actually, actually this has a high potential of closing in a bearish engulfing. And I think it's closing in a bearish engulfing to create a bear trap. And I'll tell you why. Okay, so the daily time frame is printing. This is a very, very notable time frame to look at bearish engulfings on the daily, right? So you're getting a clear daily bearish formation, okay? You're finding the support at a potential silver cross right now, okay? So meaning that we're about to make that EMA 21 cross over the exponential moving average 55, right? So that is a very bullish crossover, and they're literally touching each other right now. It hasn't happened just yet. But the price action rejecting from here, it could close today at about 1483 at the EMA 7. Okay, so that would mark off a bearish engulfing, but not every bear is looking at the silver cross. Okay, so that means that the bears are going to take control from about 1487, capitulate the price. The bulls may actually use the SMA 50 at 1378 as the trap zone. Okay, so this area right here, this is where the bears are going to start to think that, you know what, we have the outside of the triangle. The target here, the bottom side target I'm talking about, this is a very lucrative move for them, okay? Because this would encourage price action to reach down to $10.67. That's in their eyesight, right? So several areas of take profit, right? Particularly to the zone of about 1362. That area there, 1362 is the low of this candle here. That's where this SMA 50 could be located, or it would come in just ever so slightly short from that 1362 bottom. It's going to create a liquidity trap, meaning that they're not going to get to cover all the way to their target. The bulls may bounce from this zone at 1378, thus reclaiming the inside of this right here. And then guess what? That would mark off test number 4 breakout. 1, 2, 3 test, and now this would be the rejection, bear trap, and test number 4 breakout. Okay, so this is a super tricky play. Okay, this is very, very, very tricky. And I honestly, I'm so surprised that I even saw it in the first place, right? Because this is I don't know, if I was in a different setting, in a different condition, that I could have very well have fallen for this. Because remember, I was telling you this is already creating a bull trap. So I was already looking at, damn, this thing is going to fail to the downside. First target to look at is going to be 1259. And I'm thinking to myself, damn, this is really going to create some losses. This sucks. How am I going to break it to people, right? So then I'm starting to look at that SMA 50, starting to look at the silver cross here about to happen. Man, the bulls are going to take advantage of this silver cross. As soon as that silver cross happens, likely price action is going to rocket ship, man. So this is a very tricky play, okay? So be careful with how you're trading Rivian, okay? Because this is all kinds of bears and bulls are looking at this like, I can trap you here, I can trap you there. No, I have you here and I have you there. So the shaking of hands between bears and bulls is not there. Okay, this play is currently being formulated, and we're likely going to see it. We're likely going to see the light of day upon market closure today. Okay, you guys. So keep an eye on this. But this is very interesting. This is an awesome play, a versus play here. This is where I like to solve the puzzles. I like to see who's going to be the one that actually takes the upside, right? So Sebastian Lim saying FNGR, not a problem, Rob Zombie. Got you, man. Always trying to look out, my brother. No, you know. So FNGR is already approaching that. Was that the zone that we were talking about? Yeah. This is the zone of resistance, right? So we may potentially find the top side. Let me see. 240, yeah, it's already at the resistance range. We can actually face one more resistance level, and that's particularly to 251. Remember the top side of the triangle, okay? So, as I think, was it on the 4 hour? Yeah, it was on the 4 hour, right? So we're at resistance, but there could still be one more cent, a couple more cents to the upside, right? Maybe 248 top side resistance, then we would come back down. This is not ready to break out, okay? I would not long this. Let's see. We are at the 4 hour earlier. Yeah. This would be test number 2 here, right? So yeah, we still have some time. I really do think that this is not going to break out until about Friday. Okay, so I think that this is a very good area. What time is it, by the way? It's 10:34. this is likely why it started moving to the upside, because of the algo changes at about 9:30 to 10:30. So this is why we're getting that recovery here. But as soon as this thing is over, there could be a rejection here. Okay, so then we would come back to load at about 233, maybe. Okay, 233 to about 225. So keep an eye on that. So Mullen diving, right? That's what I was talking about. That I was just telling you that, man. So actually, we were talking about MULN actually facing that downside because of the. I said don't trust this upside, right? Because we're likely building more and more waves to the downside. These are ladder attacks, right? So, and guys, remember, I was giving you the target already of about 1265 right here. This is what I'm looking for, right? So this is, it's range trading right now, guys, okay? As long as you know the direction of the asset, you know how to counter trend. Okay, so this is counter trend trading, guys, is the basis of everything. Knowing where the range is within a trend and knowing where to short and where to long, that's an advantage you can always take advantage of, right? So, be very sharp with how you look at the markets, okay? So let's see. Sebastian Lim saying, been holding since I don't know when. Dark Horse, how you doing, man? If you can cover SPCE, that would be out of this world. My brother, let's go ahead and take a look at that now and see what's up, man. We were looking at SPCE just yesterday. Indra actually brought that in, and she freaking nailed that call, right? So, man, oh, man, look at this. This was the pullback zone that I was looking at, guys. So remember, I was talking about a pullback between this range here, 552 to 560, to the bottom side of about 531 to 525. We already got this candle here to reach the bottom side of 532. Okay, so UCAR and ETAO, both breakout plays. And because of volatility, it's suggesting an upside from the bi-hourly 4 hour, 6 hours set and into the 8 hour. That's why I'm looking at UCAR and ETAO. Those are volatility plays and breakout plays. So that's literally for tomorrow or the next day. So I wouldn't trust this upside just yet, although we are converting a very important area into support. But I wouldn't trust this just yet. Okay, there is still a high potential. We already gained entry from. Let's just say that you did gain entry here, right? You're currently up about 5.4%, right, and counting, right? So I'm not trying to say that we're not going to continue to the upside here. I'm just trying to say that this flashes momentum. Okay, this is a huge downside. Okay, so these immediate recoveries can be looked at as well as little dead cat bounces, right? So just watch out with that, because if we start looking at this in the 15-minute. Then you can start to see that shape kind of take into. Let me see the 30-minute. It actually may be trying to reject. This is the dead cat bounce that I meant, but this is a huge rejection here. 30-minute bullish engulfing and continuing an upside. Rejection can be faced here at the EMA 21. Okay, so that could be a rejection that would essentially bring us back down to 560. The immediate short-term time frame could be reintroduced to 552 to 560, which then would be the new area of long, and then for a continuation to the upside, right? So, but yeah, I'm looking for a resistance level at 572 or 573 at the EMA 21 on the 30-minute time frame. This is likely to live out pretty fast, right? So we're probably going to reach that target within the next minute or two. Okay, so watch out for that, because this would be a great position short, right? You go ahead and take it for ever so slight percentages to the downside. Any little gain works. Okay, you guys. So that is it for SPCE. But I'm still. I mean, if we're looking at the 4 hour time frame. We have a little bit of a pullback here, but I don't think that's. I wouldn't trust this pullback as to be a very bearish thing. I would look at it as just that we're facing resistance at the SMA 14 on the RSI, right? So this is just kind of an ebb and flow here. I think this is going to correct to the upside shortly, as the 6 hour time frame probably has that upside, yeah, and so does the 8 hour. Yeah, upside there, and the 12 hour too on SPCE. Yeah, guys, this was the loading zone right in here, and we're potentially going to be reintroduced to it in the next, I would say, maybe hour. And this, there's still upside to look at, guys. Please look at the 12 hour time frame RSI finding support at the SMA 14, or we're very close to it, right? So that distance between the SMA 14 and the RSI signal could very well be the distance between the current price action 570 to the space of 552 to 560. Okay, you guys, I'm liking what I'm seeing. I definitely am. Okay, so yeah, but I would really look at lower targets here to try to get long, as low as we can, because we already talked about this downside here. We actually met 532 with this price action instead of the 531 that we suggested, right? But still, sometimes you get some, you lose some, right? But yeah, man, that is essentially what I'm looking at, right? So no way VRM made a run. Was it on news? Let's see. Damn. Yes. Impressive, man. That is a I mean to be real here, 116 to 130, very impressive run. And this is actually reaccumulating, man. I know it appears as a little bit of weakness here. In fact, there is a heavy resistance right now. You can actually see it as this gap here is preventing the price action from continuing to the upside. I would actually see this coming back soon. So top side of the 132 could be in within the hour, and this would essentially come right back down to the EMA 21, which would be the space between 114 and about 116, as this could be preparing for a continuation to the way up. So this is very nice. Very, very nice. All right, you guys. So, and yeah, it's still up, man. It's definitely running. All right, you guys. So I think this is a pretty good place to leave off. I'll go ahead and release a few videos tonight, and I will also be releasing plays on ETAO. What the heck is that? And UCAR later on tonight. Okay, as I do see a potential rise on those tickers coming, right, you guys? And now one more thing to look at, actually. Yeah, take a look at that, guys. Still consolidating within the same range that we were looking at for the broader markets. This is good news, guys. This is good news. Great stream, Arca. Catch you tomorrow. I'll see you, the bled. Thank you for everything you do, my friend Mark Roach. Thank you, my brother. Very good to see you here, Cryptic Trader. ¿A dónde vas, compa? Well, I gotta wake up my bro. My little bro up there. James. I gotta wake up my little boy. I got to keep him in line. I got to keep him in schedule, or else I will not be able to stream in the days. And in fact, I showed up a little late today because he actually had a little bit of trouble. Right, Philip, good to see you here, my brother. I know that earlier you were trying to give you the heads up on the audio. I felt that you left, and I didn't shout you out because I didn't get to say hi to everybody in the beginning. But now know for a fact that I'm saying what's up to you. But Philip, thank you. Thank you for giving me the heads up, my brother. But yeah, you guys, I appreciate everybody for coming by. I like that our numbers are growing during the day. We'll go ahead and continue streaming, guys. We'll continue looking at the markets and continue gaining an edge over the trade. Monster Mike, thank you for everything you do, my brother. Thank you for all of it. You know how much it means to me, my brother. But yeah, you guys, thank you, moderator Sebastian Lim, Samantha H. Guys, you mean so much to me. Thank you. So yeah, with that said, I wish you well, a very, very good rest of your day. Snowdrifter, thank you. And I will catch you at the bell mañana. Adios, team. Thank you, guys. Peace.